Assalamu alaikum. And I'll just do a very brief introduction. First of all, we are very pleased to have our two guests from Saturna Capital, Munem Salam and Pantus Salander. We're going to do this presentation about halal investment and lots of issues related to that. Just for the program, there is the Isha prayer in about half an hour, maybe slightly more. We're going to break for that, then return to the presentation. And at 7, there is going to be a meal for everybody. We hope everybody will join us for a meal. And after that, inshallah, we'll have the Q&A. So,
or during the meal.
Sorry?
We can have it during the meal.
Or we can have whatever happens during the meal as well. But I'll let you introduce yourselves and enjoy, everybody.
Thank you. Or not in this. Yeah. I'll start and then you go ahead.
Yeah.
Assalamu alaikum. Bismillah, alhamdulillah, salatu wassalamu rasulillah. First of all, thank you very much for attending today, and thanks for the Praktical Islamic Center for allowing us the opportunity. My name is Moneem Salam. I am Executive Vice President and also Portfolio Manager for a company known as Saturna Capital. Saturna Capital in the US is the oldest and largest Sharia-compliant fund. The manager of the Sharia-compliant fund is known as the Amana Mutual Funds Trust. We manage about 9 billion under management. We've been around since 1986. About a few years ago, we actually launched a European fund, and we wanted to kind of use the same script, which was that in the US, all we did was go out to different communities and we educated them about Islamic investing, right? And so we've tried to implement the same program. Pontus is here. He's our European representative. He lives in Sweden, but he's been now traveling Europe since last year, sometime in September or October. So anyway, it's a pleasure. I'm going to jump in after Pontus presents, and as the program was, we'll be back and communicating back and forth between Pontus and I. Jazakallah khair.
Okay, assalamu alaikum, everyone. Welcome. Very pleased to be here. This is your first trip to Denmark. I've been a few times before, and I'm short background. I've been in finance, in and out. I've been in wind power as well. So I'm very happy I could join Saturna because this is the first time I can actually work with something Islamically in the finance business, alhamdulillah. So, just a very short disclaimer. Whatever we say here today is not an advice. So bear in mind, this is the boring slide, but it's necessary. We need to follow the rules and regulations. So, of course, we're here to educate you. So whatever you do with what we say today, it's up to you, but it's not an advisory kind of seminar, this. Just short agenda, introduction. I'm going to tell you very briefly about my journey. I haven't been Muslim all my life, but after I became Muslim, I ran into the obstacles of what I was doing in finance. So I'm going to tell you a little bit about that. And then switch over to Moneem. He's going to talk about the rulings behind investing, Islamic investing, and where does it come from, where did it start, and so forth. And shortly about investing. How many of you are investing today? Quite a few, at least 40%. Okay, good. What are you investing? Stocks? Real estate? Okay, very good. Good to know. Thank you. So we'll talk a little about stocks, mutual funds and ETFs, risk management, and dive into a little bit of how Moneem and his team works with the fund management as well, and give you some tools, and then we eat and have Q&A. Okay? And the vision, I think the vision is very important because we're here at Saturna Capital today, but what we want to do is to educate the Muslim Ummah, because this was quite a high number. And yesterday at the university, the DTU, it was fairly a high number. But it's usually, if I ask 100 people in the audience, there may be 5 people, 10 people raising their hands that they're actually investing. And I want to ask you, you're the ones that didn't raise their hands, what are you doing?
Small.
Yeah, but you're investing then, even though it's small. So what do you do?
I used to invest, but I'm not in the position in this moment. I'll be back in January.
Inshallah, inshallah. Yeah.
I want to invest in real estate, but there is limitation. We have to get some, interests to get the investment done. So it has limitations.
Yeah. You need a lot of money as well.
Yeah, I think otherwise you have to get loan from the bank, and that's
Sure.
the issue.
Yeah, that's true. Okay, interesting. No, what we want to do, because I live in Sweden, in Stockholm. So I visited Monim and Saturna last year, and we went to the ISNA conference together in Dallas, the large Muslim conference. And on the way back, we found out that when we landed in Amsterdam to change the plane, we learned that the largest Muslim educational organization, Ibn Rushd in Sweden, was shut down by the government because different allegations. Okay, this is the times for us. So this is where the vision came up, because we need to educate Muslims to start to invest, to become financially stronger, to be a voice in society. So this is part of why we're doing this, actually. Just a short journey. I became Muslim in 2003. I'm not going to tell you all about what happened. I can only tell you this was not my plan in life. I had no plans of becoming Muslim. But alhamdulillah, it happened. And 2 years in my Islam, I went to university. I studied finance and business. And my good friend of mine from the north, I went to Umeå University in the north of Sweden. He went into finance, and he called me up and he said, I'm going to start this financial advisory. He was already there, so he knew, and we're going to make loads of money, he said. And I said, yes, let's do it. So I joined him. I thought, okay, we're going to do stocks and shares, and it's not going to be a problem for me being a Muslim. But I was so wrong. He was right. We made loads of money, okay? So we were maybe 20 employees, making a lot of money every year. And but then I got married in 2008, and we were trying to have kids. And I started thinking for the first time, okay, what am I doing? And we couldn't have kids. My wife wouldn't get pregnant. So, and I was thinking, maybe this has something to do with what I do. And even if she gets pregnant, am I going to feed my kids with this haram money? No, because we weren't doing stocks and shares. We were doing bonds. We were doing stock options. All the haram you could think about, we were doing. So I couldn't really find a way to make this work for me. So I made a dua in 2009. It was October or November. Please Allah, take me out of this haram business and bring me to something halal and make me a tool for you, for other Muslims to benefit. So, and alhamdulillah, I think part of that dua is why I'm here today. And what happened was 2 months after, in December 2009, I got a phone call from a headhunting company that wanted a head of sales for a wind power company in Sweden called OX2. So I worked there that was my way out. So I left in May 2010 to start my career in wind power. And alhamdulillah, my wife got pregnant 4 months after me leaving my business. I left my 20% share in the company. I didn't take any money for it. I just left everything. And alhamdulillah, I got something much better. So my son, Sami, was born in 2011. And after this, good things starting happening. My daughter was born. I was on the board for Islamic Relief, an old, dream to work with charity. And I started working. I went to Hajj 2 times. Started working with Muslim Aid. 2019, I still work for them part-time. But then in 2022, another friend from university came that I brought into the finance business because I hired him in my old company. And he stayed. And he called me, Pontus, we're going to start this investment company, and I want you to be part of it. We're going to make loads of money. Shaitan whisper, fooled me. So I grabbed the bait and I joined them. And after 2 years, I just said to myself, I can't do this. I need a way out. So, and luckily, alhamdulillah, I met Monim I think it was 1 year back or something, because he came to us in Sweden to do a lecture on Islamic finance. And I knew they needed someone in Europe. So I called him up, let me be your guy. And alhamdulillah, I'm here today. There we go.
Okay, my turn.
Your turn. Alhamdulillah.
So just keep me on time, inshallah, okay? Just tell me when.
Whatever you have.
Oh, okay, inshallah. So Jazakallah khair, Pontus. What I wanted to do was to talk a little bit about kind of the basis of Islamic investing. Again, this is more for educational purposes. And so the way I want to kind of speak about this is, looking at it from a perspective of, business and trade is encouraged in Islam, right? And that was the mode of how the people of Quraysh and Makkah actually used to live. They were traders and they were involved in business and that type of thing. And so when the ayat in the Quran came down regarding some of the ayat regarding interest, right? One of the things that the Quraysh said, and this is mentioned in the Quran, they said that trading, al-bay' mathal al-riba, that trading is like riba, right? And so meaning that it looks on paper maybe just on a conceptual basis, it looks pretty similar to exactly how you would trade or what riba would look like. And what Allah subhanahu wa ta'ala answers back is he says that Allah has permitted trading but has forbidden riba, meaning there's a difference between the two, right? There's a significant difference. We have to understand what it is, and then after that we have to basically stay away from it. So that's kind of the idea of what I wanted to make the presentation on today, is that how do we make investments in the market and be able to do it according to Islamic guidelines. Now, as we know, right, how do we derive Islamic law? It comes from the Quran, the Hadith, the Ijma', the consensus of the scholars, and then after that, analogical reasoning. Now, a lot of the stuff that was done, 200-300 years ago, maybe even during the time of the Prophet, when it comes to transactions, business transactions, have changed quite a bit. And so maybe the fundamentals might be the same, but a lot has changed from the actual how businesses are conducted. The other thing we have to keep in mind is that there are 2 branches within Islam, right? Or 2 branches within fiqh. One is fiqh al-mu'amalat, one is fiqh al-ibadah. Fiqh al-ibadah is like the understanding of your worship. How do you pray? How do you fast? All these different things, and there's a rule behind it. And then there's mu'amalah, which is like just basically the social contract, what you do in your everyday life. And in fact, the body of scholarship in the mu'amalat is much, much greater than the one that it's actually in ibadat. Because ibadat is very, very, fairly simple. And the other thing is in ibadah, right, pretty much everything is set in stone. Meaning that for Isha, if I felt really good today, I was like, I want to do more, I can't go and pray 5 rakat of Isha, right? It's fixed that I have to pray 4. So there are certain things that are there that are fixed. In mu'amalat, that's different, right? Society changes. There's innovations that happen in a good way, sometimes in a bad way. But how does the fiqh kind of adapt to that type of thing? So that's kind of, inshallah, this is the branch, obviously, we're going to be talking about today, which is the fiqh of mu'amalat. Now, that being said, there's two things you have to understand as you're thinking about investing in the stock market. And this is what the scholars actually talked about initially when they opined about what we should be doing. So the history of the current modern day Islamic investing, right, goes back to probably around 1969 or so, or the 1960s, when the Malaysian government realized that there were a lot of people that were saving for Hajj, but what they would do is they would take the money and they would put it into their mattress or into maybe like what's, for lack of a better word, like a piggy bank or a camel bank, or they would bury it under the ground, whatever it is that they need to do, but it wasn't circulating in the economy. And so what they decided to do was actually build a fund, and they called it Tabung Haji, right? Hajj fund, and that would actually take the money from the people. It would invest that money on their behalf, and then when it came time for them to go for Hajj, they would subsidize it, and they would also they could use that money to be able to do that. Now, alhamdulillah, it's a fairly large fund. It's the largest travel agency in the world that actually takes people for Umrah and Hajj and those type of things. But also, you have to remember that in Malaysia, Malaysia is not like a 98, 99% Muslim country, right? Malaysia is 60% Muslim, 30% Chinese, 10% Indian. And majority of the money and the businesses are done by the Chinese. So a lot of the businesses that are there that you would invest in, Tabung Haji had to sit down and think, what are we allowed to invest in, and what are we not allowed to invest in? And so this is where the beginnings of the idea of how you actually invest came about. Okay. The second thing you want to keep in mind is that when we talk about investments, there's two areas or two understandings you must have. Number one is that there is a difference between a stakeholder and a shareholder. Okay, what's the difference? The difference is, let's supposing Pontus and I decided to go into business together, and I was 50% partner and Pontus was 50%. Now, if whatever we did, I would have to consult Pontus, and whatever Pontus did, he would have to consult me. So we are both decision makers in the company itself, right? Stakeholder. The difference is that in a company that's publicly traded, that is not the case. I can own one share of Apple. That just makes me a shareholder, not a stakeholder, right? I can own 1% of Apple. I'm still not only a shareholder, not a stakeholder. I cannot go up to, for example, Tim Cook, who's now the current CEO of Apple, and say, Mr. Cook, I'm a Muslim, and I want all of your money to go into an Islamic bank because riba is haram for me. What do you think he's going to do? He's not even going to let me in the door to explain to him what I want to do, because I'm not only like a very small shareholder in a $4 trillion company that's there, right? So that's what's called a shareholder. Even though we have ownership in the company, we don't have any say in what the company does. Okay, so that's something you have to understand. That's number one. Number two is that there is a general need in the Muslim community to make investments in the stock market, because without it, you might end up not getting ahead financially. What do I mean by that? Okay, so let's supposing you put your money into a bank account. That's an alternative to putting your money. So not only are you basically putting your money in something that the bank is going to use for haram, even if you give the money away, you're going to be losing out on inflation. So you lose there. Number two, you can do a business or you can buy real estate. But as we talked about earlier, you cannot buy a business or do real estate with 100 krona a month or 1,000 krona a month. You have to have a pool of money to be able to do that. So how do you slowly accumulate assets or net worth over time to be able to do that? And if we didn't have this method, then Muslims would be losing out. So that was one of the reasons why they said, okay, we are going to allow investments in the market, okay, but there has to be some tolerances as to what is allowed and what's not allowed. Okay, so that's one other thing you have to understand. Now, fast forward 1979, there was one other fund that was created in Malaysia. 1984, we started. So more and more people were catching on to the fact that, hey, you can make investments in the market according to Islamic principles. And then so they decided what to do was basically create a body to be able to standardize what does Islamic finance look like? What is contractually, what should be allowed, what should not be allowed? So I'm not going to go over, there's like 118 different standards that are there in Islamic finance. I just want to focus on one of those, which is the standard on Islamic investing. What did they actually talk about? So this came about probably sometime in the mid-1990s was when they were able to get together and really come up with this actual standard itself. Okay, so what did it say? They basically said you have three things, right? That you need to be able to do, and if you can do those things, then the stock that you're investing in would be halal, or the company you're investing in would be halal. Number one, right, is that the company primarily has to be something that's halal. So you cannot go out there and buy an alcohol company or a gambling company, a company dealing in banks or insurance. So anything that would be forbidden in the Sharia would be forbidden for you to invest in. So that's number one, right? And then if there is some involvement in there, it has to be less than 5%. And I'll give you an example a little bit later. Number two, what they said is that as the scholars got together, somebody said, debt is not good in Islam, because if a company has debt, they have to constantly pay interest on it, and we shouldn't have companies with any debt. So, the industry practitioners, they went back and they researched the companies, and out of the S&P 500, for example, there were 50 companies that had no debt on their balance sheet. That's not bad. I mean, you can probably diversify a portfolio with that. But then another scholar said, wait a minute, I know debt is bad, but also if you have money in a bank account, that bank account is going to earn interest, so interest is not good. So we don't want any companies that have any money in the banks at all. So now, I'll ask you, how many companies do you think there are in the market that have no bank accounts and no debt? Zero. So then they were like, wait a minute, okay, now we have to allow something to happen. And so that is why these thresholds were actually made. Number one was total debt to market cap. Market capitalization is like value of a company, okay? And that has to be less than 33%. This is a threshold, meaning that we're not trying to buy companies with 32.9. We're trying to buy companies with 0. And in order to be able to diversify, you do maybe 2, 5, 7, 10, kind of go up from there. So that's what we're trying to do when we do total debt. Number two is going to be the accounts receivables, right, as a percentage of total as a percentage of accounts market capitalization. The reason why I'm stumbling is because I realize I'm getting way ahead of myself in the slides, but that's okay. So that has to be less than 33% as well. And I'll go into the rules. And the last one, basically meaning the 5% is there. So the other thing I wanted to mention is that when you get 2 or 3 scholars into a room together, right? How many opinions you're going to get? Think about it. MashaAllah, they were able to get 27 scholars from all around the world, from all different backgrounds, from all the 4 schools, right, with different thoughts into a room together. And these are the standards that they came up with. And there pretty much was a consensus about these standards. It's not easy to do, but they were able to do it. So it's really now become almost like a consensus that these are the standards that people use when they're doing halal investments. And for those of you that really want to dive a little bit deeper into this area, the first on my left, on your left, top, Justice Muhammad Taqi Usmani, he actually wrote a book back in the 1990s, late 2000s, called Introduction to Islamic Finance. It's a PDF. You can get a PDF version for free. And there in chapter 12, you can read the whole book. Alhamdulillah, it's amazing. But in chapter 12 specifically, he talks about Islamic investing and what the rules are, why this was great. A lot of the stuff that I'm talking about, I didn't make this up. I mean, he learned a lot from him along the way. Okay, so we talked about business screening, right? And that's the part of I remember that I went ahead. We talked about the interest-bearing liabilities, or the total debt to market cap has to be less than 30%. Again, trying to stay away from those companies that finance their operations through debt and interest. We talked about interest-bearing securities as well. Those companies that that invest in money market funds, bonds, or savings accounts, those type of things that are going to be able to draw some type of a interest from it. And this one also categorizes also in one other area, and that is that if you have a company that is majority in cash, right, then you cannot trade that company for either a premium or a discount, because that would be considered riba. And so that's another reason why this thing was actually done. Now, I talked about the idea of a consensus. After Yofi was not the first one to come up with these guidelines. There were other companies that had done it. I mean, we were in 1986. And so if we did that, we were 14 years before they ever even came up with the guidelines. So there are other companies that were involved in this area, but all of them kind of coalesced around certain rules, and those were the ones that I talked about. But there are some minor differences that you do have, right? And the minor differences have to do with not, nobody's going to argue with you that alcohol is okay to invest in. That's not the point. The point is that, when you're looking at total debt to market cap, is it total debt? How do you value a company? Is it on assets, or is it on market capitalization, or is it on enterprise value, or anything? Those differences you'll have in conventional finance as well. That's one thing. The other thing is, do we do it at 30% or 33%? Right? Nobody's going to tell you it's less than that, but what is the threshold that you want to be able to rule? And now those are the things that a lot of the different companies that did these screenings had some differences of opinion on. Very on the margin, very minor to be able to look at. The last thing that I wanted to mention in regards to Islamic investing is that there is going to be, like, for example, let's give example of an airline company. So an airline company, right? It's in the business of transportation. Nothing inherently haram about it. So from a qualitative perspective, it's allowed. Then you look at the company and say, how much debt does it have on their balance sheet? And so there's some transportation companies, airlines, that they don't buy the planes, they lease them. So if you buy it, you have to borrow money to lease them, to buy them, and then you're paying interest. Or you can lease them, and then all you're doing is making lease payments, and that would be okay. So depending on what the company does, as far as that's concerned, what would be considered whether it would be allowed to invest in or not. But one thing that does happen is they do have some revenue that is coming from haram sources, right? They sell alcohol on the planes, for example, right? So you have to look at that percentage, and mostly in the airlines, it's really between 0.1 and 0.5%. It's not really high, and so way below the percent. But now, more than probably even 4 or 5 years ago, and definitely for the last decade or 2 decades, interest rates have been so low that the money that was in the bank account, they were barely making any money off of, right? I'm talking literally like maybe 0.2, 0.3, 0.5% at the most. But now, after 2022, when interest rates have gone up, that's become a more significant portion of their income, of their revenues. And so we do have to watch that carefully. And now I would say it's gone from that 0.5 at the high to maybe now about 1.5 to 2%. So it's still way under the 5%, but it is something that we have to take a look at. Okay, so how do you purify? Right, is that basically you say that if you're investing in a company, first of all, they have to pay you some profits. They have to pay you a dividend. Once they do that, you can calculate. So let's say the airline has 2% of haram, income or revenues, and so what you do is whenever you get that dividend, you have to take 2% of that dividend and you have to give that away. Okay, so giving away meaning this is not zakat, this is not sadaqah. This is basically you're giving away because you were involved in something that was wrong. And so that's what you're doing. So if a company ends up giving you 100 krona, and it was a 2%, you calculate 2% as a haram income, then basically 2 krona you would give away in the form of charity. Again, deriving no benefit from being able to do it, and also using it for the general masses. Okay, I think this is probably a good place to stop. What do you think? 5:42?
Yeah.
Yeah, let's do that. Yeah.
What time is Isha again?
47 is the sun, but the gamma is 57.
57 is a comma.
Yeah.
Should we keep going?
Yeah, we'll keep going. We can do it.
Yeah, let's do that.
Sure. I think this is a shorter. So we talked about, I think Monim said it, but is it part of our religion? Do you think? What do you say? To invest?
No, I don't think so.
Don't think so.
No.
Why?
Because in our religion, is it not like a rule to be rich? If you understand what I'm saying? It's important to invest like in some way, but is it not a rule to become like rich or like to your money to be that grow? You understand what I'm saying?
But is it wrong to be rich in Islam?
It's not wrong, but is it not like, I don't feel, is it like a rule to become rich?
No? Okay. Anyone else? Agree, disagree?
I think it's good to be rich. Then you can give another 30.
Sure. Why not? Huh?
I think as Muslims, we have to be the strongest. We have to get the most influence in society. And also, Prophet Muhammad sallallahu alaihi wasallam, he also made trades in Mecca when he married, Khadija. It was a part of,
Sure.
political and also economical perspectives also. So we have to be the strongest. We have to be the best, actually, as being Muslims.
Yes, alhamdulillah. This is a saying from, actually related from Umar ibn Khattab. So Yahya related to me from Malik that I heard that Umar ibn Khattab said, trade with the property of orphans and then it will not be eaten away by zakat. So investing, trading is actually something that's part of our religion, I would say, and is not to be eaten away by zakat. Today we have zakat, but we also have inflation, right? So what happens? Anyone who doesn't invest, where do you put your money? Usually in an interest-free bank account, right? Or maybe you take out the money and put it in the madrasa. I don't know. But what happens with the money you put in an interest-free bank account?
Value decrease.
Value decrease because inflation will eat it away. You're going to have to pay zakat on it, 2.5% every year, right? What does a bank do with your money?
Invest it or lend it out.
They lend it out. And they make actually money on it, riba. So that's one thing to think about if you keep your money in an interest-free bank account. But why I save and invest? Sure.
So, why didn't you refer to a hadith? Why didn't you refer to a hadith instead of referring to a saying between two persons?
Yeah, I think Monim he already showed the slide where Allah says trade is permissible, but riba is not, right? So it's nothing wrong for us to trade and invest, right?
Yeah, but
Or?
I think it would be nice with a few more examples than the only one.
Okay, do you have any?
About trading?
No? Yeah, trading, investing.
I mean, generally speaking, I would tell you from a perspective of, the brother talked about it. There was no way that the Muslim community would have been able to survive the boycott happened in Quraysh if it wasn't for the money that Khadija had as wealth. There's no way, for example, that even they would have financed the Battle of Tabuk if it wasn't for Abdurrahman ibn Auf and others who were able to bring in wealth to be able to finance the war that was happening. So the wealth is something that is encouraged, right? But it's not something you hold in your heart, you hold it in your hand. That means when you have it, like zakat, you have to pay for it, you give sadaqah, those type of things, but there's no inherent evil. With this, the Christian faith, actually, wealth is considered evil. It really is. Like that is the standard, but not in Islam. Islam actually encourages you to be able to do that. So
Yeah. Adam, should we stop? We can continue.
10 minutes to the power. Maybe 5 minutes. Go on 5 minutes. If it suits you.
All right. No worries. I'll let him finish.
Yeah. Maybe
I'll let them
we could
finish.
do the break now. What do you think?
Yeah.
People need to do it.
I have trouble talking with the Adhan.
Yeah, of course.
Alhamdulillah. Yeah. Yes,
Yeah, if I can.
I can continue until the comma.
Yeah, there's no pause function in this, so
Okay.
I think the only thing I can do is I can remove the mic. Okay, you took the mics. Okay, very good. But I'll remove the sound.
So, go. Why do we invest then? Why do we save? The people that invested here, why?
For me, at least, it's to buy a property.
Yeah.
But it's just that investing to buy a house is just too long of an effort.
Yeah.
So one of the reasons also I'm here, and also maybe some others are here to maybe get some knowledge about how we can make the process faster to, for example, buy a property, stuff like that.
Yeah.
So.
Okay. Yes. We can. We can talk a little bit after in the Q&A discuss, because there's a lot of things happening. I mean, Monim has some ideas, of course, from the US, and I would look at UK, what they're doing. There's a lot of things happening in the UK as well on that side. So I think first of all, Muslims need to become more financially stable, and then it will come, inshallah. Because in the UK, you have FIDA, you have Nesta, you have Stride Up, you have all of these startups that work with actually is form of a crowdfunding and house financing. So inshallah, we can start this here in Scandinavia as well. Well, these are just examples. Children's future. I started saving for my kids when they were born. So 500 kronor every month. So they can have something to start with when they grow up. And I do my pension, of course, through my workplace pension. Hajj. How many been to Hajj? Alhamdulillah. How many saving for Hajj? Alhamdulillah. Okay. How many want to go to Hajj? Okay, start saving then. Because how much is going to Hajj now? How much does it cost here in Denmark? 75,000. Oh, that's going to be, so in Swedish money, that's going to be around 100,000. So that's, 2019, when I went, it was half the price. So if you look at the Hajj inflation is between 10 and 15%, if you calculate. So you better start saving now, because it's not going to go down. I don't think so. Allahu Alam, I don't think it's going to go down. It's going to go up, and in a rapid pace. So when my kids are able to go to Hajj, maybe it's going to cost them 300,000. I don't know. So at least they have something to start with, inshallah. And different ways to invest. I'm going to talk a little bit about monthly investing, because that's the absolute easiest way to start. Because a lot of people ask me, how do I start? And just start small. You can do one-time investing. If you have some money left over, you can start buying into mutual funds or ETFs on the stock market. If you're not very knowledgeable, I would recommend maybe to use a fund, all right? An ETF. We're going to go through how to do this. Monthly saving. I've done this pretty much all my life. It's the easiest way. Just have a direct withdrawal from your account. I usually do it right the day after I get my pay from my salary, because otherwise I just waste it on stupid things. So I get the salary on the 25th. On the 26th, I have a withdrawal that goes into a savings account. I use Nordnet, I use Avanza in Sweden. I have an account with Saxo. All the platforms you have here, we have in Sweden as well. So I'm going to do a little exercise with you. I buy a stock, let's say a stock, or a share in a fund for 120 kronor in January. In February, the market has gone down, and I buy. I still continue buying for 100. In March, the market has gone down even further. This is the time, this is when a lot of people start selling in the stock market, unfortunately. I keep on buying in April. The stock market hasn't gone up, it's the same. I buy on 80. And here in May, the stock market has gone up a little bit. I keep on buying, withdrawal from my salary. I just buy, I keep on buying. And in June, I'm back to the same as I was in January. What's happened during this time with your money?
It went up, your investment.
Okay. Anyone else?
They lose value.
Lose value? The money?
Yeah.
Why?
Because like the stock market is like when you invest like in January, it wasn't the same value for 100 when the same like the end of it. I don't know, like it's just something else.
Yeah, well, it's an opinion. No worries. It's the air is free, what I usually say. It's you gain 20% by doing this. Why? You actually bought when it was cheaper. You bought when it was even cheaper, and you kept on buying. So all through this circle, you actually gained from buying when the market was low. So if you do this over 5 years, 10 years, 15 years, it's going to be probably you're going to stay on plus. Okay. So an example, my daughter Sophia, she's 11 years and 8 months. So I saved 500 kroner every month for her. And during this time, it's been COVID, it's been, Trump in the tariffs, and it was the Ukraine war. It's gone down and it's gone up again. So I saved, I think around 70,500 or 71,000 with the 500. If I only would have saved 500 kroner for 11 years and 8 months, it's going to be around 71,000. But with the return she got from doing this, she actually has around 160,000 now with the return from the stocks and the mutual funds and the ETFs I've invested in for her during this time. So this is something you can take with you. This is an easiest way to just start small sum, just learn how to do it. And then you can do obviously different assets. You can have gold, you can have property, sukuk, private equity, Bitcoin, someone sells. If you want to go there, there's difference of opinion on Bitcoin and cryptocurrencies. So, but we're going to talk a little bit more about the stock market because I think that's the easiest way to get started for us Muslims, and also to save up to be able to buy into property. Inshallah.
Thank you. So what I wanted to do is talk a little bit about, what are the ways that you can put money in the market, and there's multiple different ways of doing it. The first one, obviously, I think some people have mentioned earlier that they already own shares of stocks in companies in the market. For those of you who don't know, just really quickly, right? I did mention that owning a stock is like having ownership in the company, right? That's really, really important to keep in mind. Is that whenever you have that, you're a shareholder. As I mentioned to you before, you're not a stakeholder. What stocks are used for, companies when they're looking for money to be able to grow their operations or grow in size, they can either do a sales share, so the equity ownership, or they do bonds, they issue bonds, and then that's a debt instrument. And so, the idea of being able to go out there and actually sell your equity shares in the market means that now everybody will be able to participate in the growth. You have money to be able to invest. One thing to keep in mind is that the only time in this scenario when the markets are trading that the money actually comes to the company is when they do their first sale into the market, which is called an initial public offering. They have to take shares from themselves and give it out to the public. Once that happens in the public market, if I buy from him or he buys from her or she buys from another person, all of those are within themselves. The company, except for the value of the company going up, there's no benefit that the company has from being able to do that. That explains their market capitalization, but it doesn't mean they have more money to be able to do all of these things with. That's really an important distinction. But what happens is that with maybe a small amount of money, you might have to put all of that into one particular share, and then you have to be right every single time you actually do that. So what the concept came about was for a mutual fund. A mutual fund basically is a share of a fund that you get. You put money in, they give you, in lieu of that money, they give you shares. You have ownership. And then the fund actually hires a manager to be able to manage that money. So if I can only do, let's say 1,000 kroners, but and I can buy maybe 1 or 2 stocks, if we pooled all of our money together, then maybe I can buy 20 stocks, and then we could each participate in whatever the market goes up or it goes down. So the fund manager is responsible for buying and selling. If whatever he buys and sells, if it goes up in value, everybody participates equally. If it goes down in value, then everybody participates equally as well. Now, one thing to keep in mind is that when it comes to Islamic finance, the amount of money that you make, the profit, can be unevenly distributed. So if I'm a really good fund manager and everybody wants to come and have me manage the money, I can say that, okay, when the market goes up and you're making money, I'm going to keep 50% of the profit, even though I put no money in. Or I can keep 90% of the profit, whatever I want to do. And as long as you agree to it, then that would be something that's halal. What I cannot do, right, or you cannot do, is actually unequally participate on the downside. Meaning that if there's a down, everybody has to participate equally. I cannot have a loss which is disproportionate to however much I had invested in the company itself. So that's an important thing to keep in mind. So recently, what happens is in the mutual fund, traditionally has been that every day that you trade, maybe you buy, maybe you sell, maybe you don't do anything. At the end of the day, there's accountants who come up with a net asset value, which is the value of the fund that you have invested in on a daily basis. And then there's a number of shares outstanding, so you get a price per share for that. And then whenever you buy and sell from a mutual fund, you can only do it at the end of the day. So it's once a day that you can do it. Okay. So then somebody about 20, 30 years ago, I think it was Vanguard, that said, you know what, how about if we have a fund that people can buy and sell anytime they want? And so that was the concept of a exchange traded fund. So exchange traded fund basically is a fund. It has shares. It issues shares to the public. But then after that point, if for example, if there were shares that were traded and I owned some and Pontus didn't, and Pontus bought it from me, I would be selling my shares. There's nothing happening to the actual fund manager as far as his money going up or down from an AUM or an assets under management perspective. Okay. If there's so much demand, there's not enough shares to go around, then I can issue more shares to be in the market so that the demand and the supply can equalize themselves to be able to do it. So the important point to remember here is that the ETF is something that's traded real time, right, rather than at the end of the day. It's not always good. I mean, there are other benefits to it. You can sell whenever you want during the day. But the problem is that you get into this habit, and now it's beginning to happen more and more, is that you begin to trade intraday as to what's going to happen in the market, going up, going down. Not everything should be gamified in an economy. And that's really, unfortunately, where we're getting to, where everything is like that. So what are the components, right? You have basically the investors, right? They buy into a fund that's managed by a fund manager. And then that manager, if he makes money, then you make money. If he loses money, then you lose money. Okay? And there's 2 different types of appreciation that you can get. How do you actually do that? The first type is called price appreciation. You buy something for 10, you sell it for 15. That's the price going up, right? Or you buy something for 10, you sell it for 7 or 5. That's going down. And then the second one is dividend yield. Dividend is, as I mentioned to you earlier, it's the profits that the company gives to the shareholders. You can either keep that money and go buy something with it, or you can reinvest it back into the same stock or fund. You can reinvest it into other stocks or other funds. That's up to you, but there is a return that you're getting. So the combination of the price return and the dividend is called a total return. So what does that look like if you're ever going to one of the screens that show you the stock, right? The first thing you want to look at is in the circle, that is a dividend yield. Basically just how much dividend you're going to get based on the amount of money that you have invested. The price return means you bought something here and the value is up here, or you sold it up there. Either way, you have a realized or you have an unrealized gain.
And Sheikh, and all is this halal, like in the Islamic way? Okay.
Yes.
Okay.
That's
There's nothing in it.
No. I mean, the company has to be halal,
All right.
but the buying and selling of it is fine. Yes.
So this 0.76 is a fixed size?
No, it doesn't have to be. It could be something that the company could go make it say, look, I'm not making any profits. I'm not going to give you anything.
So this is for one share, right?
Yeah.
So it's not a percentage, but it's just.
That's correct. That's right. So I mean,
decide every year, really.
Yeah.
It can change every year.
It can change. Yeah. I mean, whenever like companies doing poorly, they need to save their profits. They're like, okay, we're not going to give any dividends out. The company making a lot of money, they don't know how to reinvest that money for a higher rate of return. They'll give out the money to be able to. Some companies pay no profits at all, no dividends, right? So if you look at the higher growth companies, those will not pay you a dividend at all, because what the idea is that if me as a company, the money that I make, if I can reinvest it and make you more money than the market, I'm going to keep it. If I don't know what to do with it, like larger companies, like for example, let's say Danone or Nestle, right? Nestle, I mean, pretty much they're fairly large. They're not growing very fast. So they want to give back to the shareholder some type of a profit. You compare that to ASML or to NVIDIA or something. NVIDIA actually pays a dividend, very small though. But they basically are saying to themselves, no, I can do better with that money. And so I can grow the company faster if I kept it. That's kind of how management thinks about the dividend versus not dividend. Okay. Anybody else have any questions before we move on? Yes, sister.
Did I hear correct saying that you can only invest in stocks that pay out dividends?
No, that is not true.
Okay.
Yeah, no, you heard it incorrectly. You can buy. Good.
Sorry?
Did you want to say something else?
No.
No. Okay. So you can buy any stock that whether it be giving you a profit, not giving you a profit, doesn't matter. The criteria that you're using for the stocks is what I went over earlier. That's what makes something allowed or not allowed, right? And so, a lot of times what happens is that, and I'll let Pontus come up after this, but really, look, the bottom line, the market is not a place to make money from average person. The market is a place to build wealth. Okay? What I mean by that is the amount of time that it takes a person, unless they really love what they're doing, the amount of time it takes somebody to research it, make sure that everything is halal, all of those things, the amount of time it takes, you might be, but that same amount of 1 hour or 2 hours that you're doing, you probably will make more money in that 2 hours doing what you do as a profession rather than over here. You might want to spend that time with your family, right? With your children doing homework. Okay, maybe you'd want to do this first. But whatever it is that you want to do, you would do that. What you do in the market is you give it to somebody who knows what they're doing, and then you let it build over time and build the wealth over time. And so kind of keep that in mind whenever you think about it. I'm not telling you not to do it. And I'm not telling you that it's haram. It's not. But think about it from your own perspective. The 2 or 3 hours a week that you spend, if you love it, maybe you do it. But if you don't, it seems like a chore. You can spend that time better doing something else. Then you should think about that, doing it that way. Yes, Mo.
Earlier, you talked about how if the company has some, illegal activities or haram activities, you have to pay that percentage of the amount you gain to a charity or so. In the price appreciation, you have to do the same thing.
No.
No.
Okay. Because the reason why is that when you get a profit, it's directly you can tie it back to what the company was doing. In this gain that you have, why did the company go up? It could be a rumor. It could be something that they're doing they haven't gotten any money for, but they said something they're going to do in the future. You don't know why the market is going up or down, or the stock is going up or down. So you can't really tie it to something that was haram. So that's why the scholars have said, when you get the dividend, that's when you purify. Okay.
And that's going to be once a year. So purification only once a year.
Yeah. Did you have a question?
Yeah, I remember when I was in the market earlier in my life, I was very much addicted to it almost. When I was coming home, first thing I checked before there was smartphones and so on. So, what is your advice to people not to get too deep in the market and their brain will always be in the market? Instead, because when you're sitting with your children and doing your homework, your brain is still there.
I mean, that's especially. I mean, you were doing it back then. Now it's even easier to do it, right? In different apps that you can go in there and just buy whenever you want and sell whenever you want. It's become a game for a lot of people. And the reason for one of the major reasons why people buy a stock or not buy a stock, FOMO. No, it's FOMO. You know what FOMO is? Fear of missing out. Right? You're making money. Oh, I need to get in right away, so I better do something as well. I know nothing about the stock or nothing. I'll buy some. And that's what Bitcoin is, if you think about it, right? It's basically, most people buy Bitcoin not because they know what the product is. They probably couldn't even explain to you what mining and all those things are, but they're going to buy it. Why? Because somebody else has it and they're making money off of it. The other thing that I'll mention to you, and I'll come back. The last thing I'll mention is that when you're talking to your friends, no matter how close friends or even they are, they will always tell you about their winners and never about their losers. And majority of the people will end up losing rather than winning. There's actually a really good article called Mind the Gap. You can look it up. It's on, Morningstar has a story. What they basically did was they went back and for a 10-year period, they took all the funds that were in the market. Everything from very, very aggressive to very, very conservative, right? Some with zero return, very high return. And they said the average return for all of these funds was about 7.5%, right? And then they said for the same period of time, how much did an individual investor make investing in all of these funds? It was 4.5%. Can anybody tell me why there was a difference? Because the individual, you want to answer it?
Assume that is because there was a lot of trading.
They're buying and selling at the wrong times, right? And so when they were buying and selling, obviously they're going to be like, they're not going to be patient with it. So they probably end up, selling it. I don't know how to use this, but anyway, they end up selling it here and then buying it back up here rather than the other way around. And so the difference is that most investors will act emotionally, and that emotion will lead them to actually lose the opportunity cost sometimes of being able to be in the market. Did you have a question?
Yeah, maybe a step back. Where can I see how much percentage of particular company is not is haram, but I have to worry about it?
Sure, good question. So if you're doing it yourself, right, all of this information is publicly available. So for example, if you go to, let's Yahoo Finance, for example, right? In the section, they have a balance sheet. So when you click on the balance sheet, it'll show you how much debt they have, how much their accounts receivables are, how much the assets are. So that's how you calculate it. If you're looking for revenues, haram revenues, you go to the income statement and you look up the top line, and it'll say, I don't know, let's make it up. Let's say chips, microchips, GPUs, other things, and then it'll say other income or other revenue, right? Usually that other revenue is going to be something that they're interest derived or something.
Same for fund or ETF?
Okay, so now then the next thing. So then once you've done that for the individual, what happens for the fund is, like, for example, in our fund, we calculate the amount of haram revenue there is, and at the end of the year we publish that number so that you can go out and they basically pay the amount yourself. Okay, if you're in a regular fund, that's very difficult to do, right? Because you have to go through all of the different ones that are there and kind of calculate it yourself.
Can you explain the last point you just made?
Sure.
Like every year you.
Yeah. So every year, what we do is we do let's suppose you had one stock, right? Yeah. And that one stock had a 2% haram revenue. So as soon as they give you
When you say haram is riba, or what do you mean?
It could be alcohol. It doesn't have to be riba.
Okay.
It could be alcohol. It could be something they do with gambling. It could be anything that they're doing. So whatever that haram revenue is, you know that if they give you a profit, you have to take 2% off. That's for one company. What about for 5? Then for 10? How about for 20 companies? 10 of them pay a dividend, 10 of them don't. So we calculate that for you from what funds, the stocks we own. At the end of the year, we give you the amount that needs to be given away.
I'm sorry, like I'm just a
No
normal
problem.
guy asking. I
No
don't
problem.
have that much knowledge about it, but like you are interacting, like saying two different things right now. In the beginning, you said like "Halallahu al-bay'a wa harrama al-riba," and right now you're saying, oh, it's all right to invest in some riba.
Yeah.
You are already like helping those companies.
Were you here in the very beginning?
Yeah.
You were from the very beginning?
Yeah, I was.
Okay, so then I talked about the idea of two things, right? One is shareholder and stakeholder. The other one was haja, right? If this, all of this that I'm talking about today is based on those two things. If you don't agree with that, or you think you have an exception, then you can apply this rule to yourself. That's simple as that. So if you can find a better way to be able to invest 1,000 krona a month than doing it in the stock market, then this doesn't apply to you, right? But if you can't, then this is the best way, and the scholars have given you a guideline of how to be able to do it. Okay?
And that was the AOIFI.
That's right.
And you have in the same chart has S&P and FTSE mentioned.
Yeah.
So are those like considered halal as well?
No. So what I mentioned is that each of these has companies that actually, for example, S&P actually has an index which is halal. They've gone through and said, this is my S&P 500, right? I went through the Islamic screening process and I came up with, I don't know, let's say 250 that are going to be halal. They also publish that. Okay, you don't. So there's multiple different ways you can get the information. Number one is there's multiple different funds. So if you think about what stock you want to buy individually, look up one of these funds. If they have it in there, you know it's halal. The other way is that a lot of in like the index, like for example, it's called something called the MSCI World Islamic Index. So that'll give. They buy basically all the companies that are considered halal in the world. So most likely, if you are looking for a company, if it's not in there, not always, but most likely, it's not going to be allowed to invest in. So there's ways for you to be able to kind of get those answers just through a backdoor. Okay. Yes.
Are there any limits on how much you can speculate when you invest? So, for example, if you trade every day, or if you just trade companies that are where the price might be inflated due to expectations, or are there any such limitations?
So look, I mean, if I'm telling you that you're doing buying and selling based on your friend's advice, or you have no idea what the stock is or anything like that, what is the difference between that and going to a casino and gambling? At least in the casino, you get free food, right? So there's no difference. So in that speculation, that would not be allowed. But for example, if you've done the research on the company, you know what the value of the company is. Let's supposing the value of the company is 100 krona, right? Now, if the 100 krona is there and that same day it goes up to 120 because of news, and you're like, oh my God, it's too expensive, I wanted to sell it. And then that next day it goes down to 80. Well, you know the value is 100, it's now 80, you can buy it back. So the idea of trading is not haram. It's how are you trading that you have to look at. Are you trading based on your next door neighbor's advice, or are you trading it based on real investigation you've done? Okay, so we'll stop here. Unless it's a burning question, I'll stop because we want to keep going, and we'll have time after that. Is it a burning question? Everybody thinks it's a burning question. Okay. All right, I'm going to give it back over to Pontus, and he can go over the next part.
Yeah, risks. Everything you invest in is going to come with a risk. Okay. So as long as you can make a return, there's going to be a risk. It all depends on how much the expected return is, right? So the larger the expected return, the higher the risk is going to be, okay? So all these stories about Bitcoin and everything, that's high risk. Okay, some made money, some lose money. Some lost a lot of money and some made a lot of money, but that's the risk, okay? So different factors that affects our investments. It's going to be inflation, of course. This is something quite new for us. It's not a new thing, but we haven't had inflation really since the 70s, 80s, beginning of the 80s. Interest rates, of course, that's caused by inflation. Islam compliant is very important for us to see what we can invest in. Geopolitics, climate crisis, currency risk, energy price recession, and time horizon. I'm going to come back to this, but these are all different factors that affects our investments. And the risk management comes, you have to kind of grade whatever you invest in. And you have to know where on this scale an investment will be. So for example, if you want to go to Hajj next year, you have 100,000 or 75,000 Danish. What are you going to do with them? Here. You're putting in them in Bitcoin to get 150, maybe take a friend or your wife or your husband, or you keep it down here. So high risk, single stocks, emerging markets like China, India, all of these, crypto, of course. Medium risk would be like our fund, a global equity fund, something that you spread out the risk. You don't have one stock, you have 40, you have 200 stocks maybe. Property would be something on the lower side of the medium. Sukuk, do you know what sukuk is? No. It's an Islamic bond. So, for example, a bond is, if I'm a company, I need to borrow money. I go to the market, I'll say, okay, you put your money in this bond, and I will pay you interest for 5 years. And then I'm going to pay the money back, okay? So that's a bond. The Danish government can issue bonds to loan money into the society. So other countries can invest in the Danish bond. And the Danish government will pay off interest. But a sukuk is an Islamic way to actually to get an investment. So for example, I'm a shipping company and we want to buy a new tanker so we can ship and we make profit from that. So we'll get the money from the market and we'll say, okay, we'll invest in this ship and we will share the profit with you. So this is the fundamental difference between a sukuk and a bond. The sukuk is asset-backed, okay? It's going to be a ship, it's going to be a real estate, it could be a factory, it could be an airport even. States can actually get money to build something, infrastructure, and share the profit from that with the investors. So this is a sukuk. And you can buy these in ETFs and mutual funds as well on the market, okay? Bank account, low risk, no interest. It's just to keep money. So this is how I plan. So coming back to the Hajj, okay? If I'm going to use the money in 1 year, don't take risk. Don't put them in even an equity fund. Don't put them in single stocks or cryptocurrency or whatever, just to make that extra. Money, this is how I've always done. Money that I need, that I know that I need within 6 months, year and a half, I don't invest them. I keep them safe. If it goes up to 5 years, I might do some medium risk. So if I have 100,000, maybe I keep 20,000 in a low risk. Just if I need it, I'll get it out. I'll have maybe 40,000 in a medium portfolio, medium risk, global equity ETF or something. And I can put some money on the long run. If you have a pension, for example, you're going to use, you're 30 years old or you're 40 years old, and you're going to retire when you're 65 or 70, those money you can actually take some risk with, because you're not going to use them in 20, 30 years. So this is what can be happening. So if you look at the stock market, this is the Dow Jones Global Index for the last 10 years. If you started here 10 years ago, you'll be on plus, okay? And it's gone up, it's gone down, it's gone up, it's gone down, it's gone up, it's gone down, up, down, up. See? But time has done that you actually come out on top, on plus. So you invested in 2018, for example, and you needed the money in 2 years. Good or bad decision? Right? That's the wrong money. You put the absolute wrong money in the market. But if you put the long money in the market, in 6 years, with a 6-year horizon, you will come up on plus, okay? So this is, remember what I said about monthly saving. So if you've done the monthly saving, you would actually buy in cheaper here. You buy expensive here, but here you would buy cheap, okay? So all over, with time, you have come up plus, all right? So this is, and also another thing, when you invest, when maybe you started to invest with a 10-year, 15-year horizon, but the closer you get to where you're going to use the money, you have to lower the risk. Okay, I'm going to tell you a story. When I worked, ran that company, the haram business, the advisory, financial advisory. In 2007, a lady came to me for advice. So we had a meeting. She was 64 years old. She was going to retire the next year at 65. Okay? So maybe she had, I don't know, I can't remember, 3 or 4 million in her pension fund. And it was all invested in a Latin America mutual fund. Is Latin America high risk or low risk? It's super high. So look at this. She was up here, but she's going to use them here. So it's totally wrong. And she did this decision 10 years ago or 15 years ago to invest in this Latin America fund. And she made some money on the way. So I told her, you need to be here. You can't be here because you're going to use the money in 1 year. Your whole pension is in a high risk. It was only one fund. It's crazy. So we sold it. We changed everything. We put it into extreme low risk. What happened in 2008? Credit crunch, right? All the banks fell. The stock market was just crashing totally. And I met her again, and we looked at her fund. Do you know how much it lost? -1 billion. Actually, 80%. It went down 80% in 2008. So if she would have had her whole pension, 3 or 4 million, that she was going to live out of the rest of her life in that fund, she would have lost 80% of all the money. Okay? And she would never have been able to retire at 65, maybe at 70, maybe at 75, okay? So this is why it's so important to change the risk the closer you get to where you're going to use the money, okay? So divide your capital in low risk, money that you're going to use in up to a year or two, and then the long money you can take more risk with. Okay? Agree?
Okay.
Good. Yeah.
When they, regarding pension, when they bring it down to lesser risk, there is bonds and which is not allowed, so.
This is, this is actually something we need to work on as Muslims. We need to demand from our employers to bring in halal alternatives. And we can not only have, as now, I mean, we have our ETF on Nordnet and Saxo, but we need some sukuk as well. Because when you're getting closer to retirement, you're going to need something to balance the risk with. And right now, there's nothing. There's only equity ETFs or mutual funds in the market. So the only thing you can balance risk with is actually put your money in an interest-free depot or account, and maybe keep a little bit of stocks or an ETF on top, but lower the risk. Maybe have 80% really low and a little bit on top. So, but this is something we need to work on in the community. I actually there was a brother in Sweden. He went to one of my seminars, and he contacted me afterwards, and he said, I just got this job with, I think it was PVC or KPMG or one of those big ones. And he said, they want me to invest my workplace pension in, there's nothing halal I can invest in. So what's your advice? Well, I told them, well, ask them if you can have just a free account in Nordnet, for example, or Avanza. You don't have Avanza here. We have Avanza. Nordnet is the biggest in Sweden. He came back, so he asked them, and they said, nah, we don't really want to open it. So I told them, no, ask again. So finally they agreed, so they opened an account. So he's the only one that has his workplace pension with Nordnet. So he can actually invest his pension in a halal way with Nordnet. But we have to show the demand. We have to ask for it. Maybe it's not possible, but at least start asking for it. And it will be, and also start investing something, so Nordnet can see, Saxo, they can see, we are tracking how many investors there is in our ETF. I've done this since last year, and it's up, I think, 400%. So we are in contact, me and Monim, we went to visit Avanza, the competitor of Nordnet in Sweden. So we met with their head of funds and their CEO and talked about what we're doing. And they're very interested. So they're watching how many are investing actually. So hopefully they will bring in more alternatives for us, because it's not enough with one, okay? It's nice for us to be the only one in the market, but for you as a community, you need more variety, okay? You need to be able to control, to risk manage your portfolios as well. And hopefully we get there, inshallah. Anyone else? Yes, sorry.
So I have two questions.
Yeah.
The sukuk, is it the same as what they're doing in UK, that they're buying these Islamic banks and they are buying the property by the sukuk way of doing it, or is it totally, I've misunderstood that?
I'm not sure. No.
I can explain it.
No, you can explain. Yeah, I'll give it over to.
Okay.
Monim.
You have a second question?
Second question is that there's also, you have to also pay when you get a return by your, you have to pay tax, right, to the government.
Yeah.
And this tax, is that so, let's say that you have to, when you cash out the haram money, right, the 2%. So these taxes, is it excluded or included in this haram money concept?
I think you have to pay tax on the whole first.
Okay. And then
So you're going to be taxed there. But I think you can use the access per conto, right? You can use, if you open an access per conto, you pay less tax in Denmark, right?
Can I just...
Sorry, yeah.
Because the food is ready now.
Yeah.
And maybe it seems there are lots of questions, and we can take them
Yeah.
in half an hour if people want to eat something.
Yeah, sure.
Yeah. I came in from just now. I don't know if I'm interrupting.
It's up to you guys. What do you want to do? You want to get your food and come in here and start eating and talking? You want to do that?
Should we finish, or you're going to...
It's you.
It's up
raise
to
your
you.
hands.
It's
How
up
many
to
wants
you.
to eat and talk? Or how many wants to eat and talk?
Yeah.
Oh, there you go. Majority wins.
So let's get your food and come
Alhamdulillah.
back, and then we'll finish up.
Yeah. Huh?
We'll do it after.
Yeah. Okay.
People are free to eat wherever they want. We put in some blankets to sit on the floor in the mud. Whatever you just feel free to eat wherever.
No, we're gonna put it here so that we can continue.
No.
No.
Just eat out there because there's lots of plates and stuff.
Okay.
So just take a break and then come back.
But we can have Q&A while we eat. You know, you can ask questions. We'll try to...
Sisters, go first. If you want to take food, and you have to wait for you from the oven.
So yes, this question in Denmark, when you have kids, for instance, right? So you can make a foundation for your kid at the equivalent of 250,000.
Yes, I think that's a special account,
And
right?
you can put you can have the 250,000. You can invest in the stocks, whatever you want. And the profit the fund is going to make, you can
Yeah.
say the purpose of the fund is if you want to give your child
my question is, let's say,
Yeah.
So we have,
about 5 and less than. So it has to be less than 5.
okay, let's say.
And you have to give up.
So I have a slide, so it's the actual percentage.
I have a general question, maybe something that applies to Denmark. If you leave Denmark, you cannot have a bank account. And I guess same with the investment accounts as well. You need to be registered. If you're planning to retire and go somewhere else, maybe after 10 years or 5 years, you work somewhere. Do you have any information on that? How should we what should we do all these investments?
Well, that's good. Bring it up here.
Should I sit down?
We're not experts on that.
You can do that. I will tell you this thing. There's a story that came out in the Wall Street Journal that basically was talking about the fact
moved to Sweden.
The
open an ISK.
what happened to accounts not paying the tax,
Really?
and they just got caught.
Small.
And what the return rate of return was, and the same some amount of value for people who were alive and actually did something. And they realized that people died at a high rate of returns because they forgot about the money and they didn't try to buy something.
Nothing.
So if you're only going to be gone for 5 or 10 years, maybe you decide to stay with it, you let it be in the market, or maybe you decide to move it.
That's why
You can always leave it down here, right? I don't know the rules here.
That's bad, right?
So that's,
If I'm not at retirement age, I'm going somewhere else.
also Norway as well. Actually, I did a presentation in Oslo. And
They have,
it's really expensive. I'm sure.
Oh,
Here, I think it's equivalent to Norway.
You need to
With an EU,
do
it is easier. Yeah. So I've heard bad stories about like somebody moved to Brazil.
No, because we're going to
He had already here, when here, you can't use online like raise accounts. It was to invest in culture. It was whatever 100,000. It's
sorry, but sorry.
Oh, okay. Like smart. And one thing you need to come here in person. So now you have to like spend time and money to fly here and then operate an account. So It blocked, like one of the banks blocked someone's account when they were out.
And over time, I mean,
Because if it's just an account which is like low risk, you're losing to inflation, you guys probably are trying to teach us to put it in investment. So it
I
doesn't
think you should have
stay
a
static.
balanced portfolio.
But then we have this risk of like, when we are probably most of like
to build
people like me, like
Yeah.
want to move around. And
Yeah, exactly.
That's how I felt and not
The
invested.
stock's going to be the
In like earlier 10 years.
It's easy to get up.
That was my thing. Like I was saving and I was not investing in housing and everything. So I was doing that. So I have money in the bank. It feels good because I don't have to ask anyone. But I don't know that like inflation is hurting it. So
Probably is. But what I would tell you is this: a couple of things. Number one is like in the whole part in the plan of you moving out somewhere 5 years ago, don't not save now. Right? Do it. If you have to pay the taxes, you have to pay the taxes. Don't do it. But at least you were able to save whatever it is that you were doing. Because those plans might change. So if you look back 5 years around and you never been doing it, and you did save, and now you've lost out.
but how do people like this as well? Like if
Like what I do, right?
you live in the US, right? You will always keep it there, or if you move somewhere else, there's no freedom with your money.
I would say you can, but I look at it from a perspective of like, is there, like when I moved from the US to Malaysia for 7 years, and then I knew I was gonna
That's the
come back.
miners.
So what I did was I left everything in the US because
the
I'm a
companies, the
citizen,
mine.
I'm been retired.
Yeah.
My family's there, everything's there. So
Sorry,
I
boss.
left there.
Yeah.
And when I went to Malaysia, I did have money there. And whenever I go back,
There's no way of like, because from here we are buying ETFs and funds which are in US, right?
no, we buy it, they're domiciled in Europe.
Domicile here, but they were named like US fund and the companies behind it, like allocation.
Yeah, that
is-
doesn't matter.
It doesn't
No,
matter.
that doesn't matter.
Like Nvidia, Microsoft, the
Yeah,
allocation is
no, it
there.
matters to the fund.
The fund is registered here.
Yeah.
And I can only buy that. I cannot just sit here and buy something in the US.
The US fund won't allow you to purchase.
They would not. Okay.
So if you want to buy something from the US, like stocks, you have to either directly go do it or put it in a European domicile fund,
Okay, which is
which is
from
what,
here.
yeah.
Maybe you can just take some.
Yeah, sure, sorry. I just thought everybody.
Go
first.
You
live in US?
Yes.
Where?
Seattle.
Yeah.
Strict or diets. Yeah. I have been for about 3 years. And before that, like, it was a dedicated working, kids, family, that sort of stuff, trying to get out until really the late 30s, and everyone says, late 30s, come on, man. Well, I was starting to actually, yeah. I think so. I'll say maybe
sports and very problematic. Oh, yeah.
That's why that's why they hire straight companies for outside. Quality is not so. Many buildings they only last for a few years.
What do you do?
I work for
Like a nursing home care.
yeah.
Hey, what are you doing? How are you? Yeah.
Pretty much similar to the previous one.
Smaller, no, same. Pretty much. From that perspective, pretty much. Similar question.
Yeah.
Yeah. It's very similar here. Raining in the winter, short day is rainy, dark a lot, but summer is always. Act like a mountain, 45 minutes away, I think we should 5 minutes away, perfectly not. We have to, this last winter. Yeah. All of our coffee, the water. Yeah.
You're talking regional restrictions.
You do have regional. You don't believe I mean, probably for studies, for study finance and stuff, Malaysia probably. They have a university, companies, and education one. There are universities. extractions of the receipt. There's also a very important one called PCM. I don't know that, but those two that we're
Do you know about the private sector, civil sector over there?
Were you ready?
Yeah. It's very good here.
You're welcome.
I work within the production, then switch into but still in the same sector.
Yeah, it's actually very strong here.
Yeah, it's a blessing. Even if you just go a bit away from home, make drastic differences. It's really, it's a blessing to be here, and that's like very especially for financial world here. It's not really something that you can actually participate in. Not really. Probably there are a lot of options, but not if you want to take some more if you want to practice that.
I have to go to dinner you guys last week. How are you?
We arranged that okay, we'll eat, and we weren't getting all of us rather than we're going to disappear. Once they come off this, so we thought probably it will be very similar. But it's the panel way.
Sometimes the questions are different.
Yeah, exactly. Also an awesome region. If no one really pushes into anything, maybe you could also take the lead and for something. Go a few layers deeper.
Yeah, we did that a little bit in our history.
Yeah, at the university.
And there was more, academics. We did that a little more. Yeah, it was nice.
That's good.
Good crowd.
That's good. Well, right, you also tasted the talk about that tax differences.
So did you get this? We got this.
Yeah, so you will be
January.
Yeah, exactly. So that will be for Europe, right? It's not country specific, so it's not guaranteed that you get your first round. Then we will have access to it from Denmark.
So not access from Denmark, it's not all Europe.
We will have a okay, that's good.
Because I think they knew about it, and they had a really fight. So you can only do it once a year.
Yeah.
So we had to wait until January.
Okay, that makes sense. I think that stuff will really boost Asian recognition. And you have offices in where?
No, we don't have offices anywhere here.
Okay.
Offices operated around. Let's see, do we have to figure out how to do it?
How does it even work when you run ECS? Basically, we're working.
There's a local company in based out of the UK that does it all over Europe. It's called Fine CTF. They're the providers. And if we just come in and manage money, then also provide help. Make money for it. They're providing
If we will invest in the company via the different platforms like that, we don't actually support the performance, we just buy stocks.
So it's in the ECM, yes. So what happens is that there has to be a demand to be able to create new shares.
Yeah.
So if you create new shares, then you do that. If you buy from somebody else, then it's going to do that.
Creating new shares, how much would that be?
For now, it's 1 million.
From
So that means that enough people would have to come in. And it doesn't have to be only for one, it could be Swedish plus Danish plus altogether. They're all
Okay, and which difference will that make for those who actually have that money and invest in you that way? The same. So whether or not you buy stocks from the you buy part of the ETF, or you got enough money in invest. What's the incentive then for someone to do the other thing?
So for example, when you buy something, you get right? So you could sell small amounts of products. When you do the share issuance, that's called a unit creation. So if I had $1 million, for example, I'm going to go to the market and buy it. You might have to do it. Or you might do the hybrid price stock. That's why I go to the dealer and they create a unit. That's what you do. So if you got a small investor, like for example, or you're a big investor, you got but then you can't create a credit. You have to say the market.
Okay, if it's ready, you could then also be able to negotiate price.
Price is exactly whatever that price is.
Okay, but then you'll be able to create a unit based on that price. Okay.
So what happens is that now this is getting very detailed. So I told you there's a bid and ask, right? So there's a bid and ask, and there's also a need. And then that's happening today. So what the market maker is supposed to do is make sure that the bid and ask don't go to like stay around the thing. So you have to sell that in the market. So we have to sell a large amount, we have to buy a large amount, we go on to the side, we create a unit for dissolving. And that's why you stay within that. So you create a unit on the price of whatever you pay.
Okay. And what would that mean for you as an owner of the what would be for the general shareholder NTS? It wouldn't be valuable.
Yeah, as a so, like I said, so you're buying something by selling, that is a practical. When we create a unit, we get money and then we manage for it. But the way the actual shares work is what is you're very pro rata amount for them.
Okay, well, yeah, that makes sense. Okay, and regarding the standard investments and stuff like that, you managed to hold that in the US?
Not a lot.
Okay. And have they been a shift, or were they always very positive regarding these?
I mean, so a couple of things. There's been a shift definitely. And also now that, for example, when the size of raising money, they're ready to build a building. They're growing, right? And we're mature enough to go do other things like endowments or what. But now they're getting to that. So that's why we're getting a lot more interest. A lot of besides we used to come do it, some did it, some did it. But most likely, if you have a 2-year plan to raise the money to build money, you won't have it. Maybe only 3 years. So buy some money, invest the money, and then as you go, whenever you need it, keep the money. So a lot of people did that, and they benefit from it. So a lot of people benefited from it, but if you didn't, then you would also have inflation. Right? So the problem with inflation is nobody knows. Like if you were born in 2009, for example, or even in 2000, you don't know what inflation is. So that's the problem.
These explain to me very little questions. So time in the market means time in the market. Why is that? Is that because the accumulated effect of the early investments is better than?
That's only one part. Okay. In this particular example, that's not the one. In this particular example, that's more to do with emotion. You have to do more with emotion than it does when an average investor does. Because he will always buy on the market and he'll sell at panic and sell on the market. So that's why spending it is great. But there wasn't enough correlation. So that's why I just put it in there, and that's time going to go over. So let's go down and look at whatever it's more time in. That's going to be.
Okay. What about one-time negative versus continuous?
So the studies that have been done on this subject have shown that if you have the money, because again, if you don't do it, you're kind of spending time in the market. You want to lose it. For some people, they go, look, I have a lot of money, I'm nervous about putting it all. Right? So then I'll say, look, come up with a plan. In the next 3 months, I'll invest all the 3 months without thinking about it. You have to take notion out of that's the most difficult part.
For the guidelines of soya and stuff like that. If you just look up a random stock and it doesn't say, apply for one, but this is quick. What does that actually mean? Yeah, it's a difference of opinion.
So I hate the question of I don't know if I got it right.
Yeah, you mentioned it.
So what I would do, rather than go to a farm fund or another fund and look to see if they have the stuff.
Yeah.
If they don't have it, it doesn't mean it's not allowed.
Yeah.
But it's more chances that keep taking. But if they do have it, then it's something that's the idea of the Russian book for them is like because they're going to capital,
Yeah.
it's not like the data model. That's what it is. For us, it's different because we're just data model, we're investigating.
They do that, you investigate what downfall are they doing?
Just basically the public information.
You can investigate further than the public.
So you can think about coming up or more research. And we can.
And if someone is concerned that it's sort of a 175 and others might say something much less, what's the standard applied to that?
So my opinion is that again, so we are, so the other ones that do less are passive loans. Passive loans, you basically throw money at the end. That's how we work with you, so we should be paying less. If we're gonna be investigating, we need to reason as the best then we should be paid for doing it. And so over time, we prove that it's working. And so that's what you're paying. So it's not, these are not loan that you have to look at. And then from my perspective, the first thing is, not straight ahead. From my perspective, there's no way to this one. That's the reason. And then you feel average. Support less than extra. When you buy it from the you're basically doing no work. You're doing whatever money. And that's never something that's going to work. So that's why fundamentally we believe we should be working towards finding better. I'll never put it in the date, my idea for retirement.
But at least I would find it on moment, I couldn't find it on Saturday. So it is just goes to show that. Maybe some cities who are. But it would be that I haven't struggled on the ETF or whatever city.
But I think all the things that everybody wants to
Yeah, maybe like you said, there's a side of it that you don't have, or I'm not sure.
There is some kind of, like I said, people also like you need the process. Have process and say, okay, now let's say.
No, that's maybe the thing enough. Or maybe we're just not on the platform, that's possible. So we're not on everything, we're just on the
With the value, we also have as well. Right? Yeah.
If you go really down to the
My friend I met her in Malaysia, and she was also like, and then she said, you know what, and girls, they were also IT. So when you said it, I was like, it's so right. Because they could be doctors.
Hello, hello.
Prøver sådan at lave en gang Ja, måske det koster.
Yes, thank you.
With the questions. So is there like a time when you want to end?
No.
No.
I mean, maybe 8 o'clock or maybe 8:15, whatever.
8, okay.
Yeah.
So let's go for
Sure.
8:15. Do you want to take the Q&A and just skip everything else?
Yeah, sure.
Or do you want to do that?
I'll do it quickly for whatever you think.
Yeah, do it quickly. And then we can...
Let me get some more people in here and we'll get started.
Oh, yeah, we took away.
Hmm?
There's only like 3.
Or maybe not even.
Yeah.
What's the one after this one?
Yeah, perfect.
Should we start?
I think we can start.
Okay.
And then we maybe just end like 8:15. So we have like 1:30.
Yeah.
Sure.
Okay, Bismillah. Jazakallah khair. I hope you enjoyed the food. Alhamdulillah. So before you fall asleep, I wanted to kind of just go a little bit further into who we are, Saturna Capital. As I mentioned at the very beginning, we have been around since about 1989. The funds that we manage are the largest ones that we manage are these 4 that are up here. Our oldest one was started in 1986, which is the Iman Income Fund. That's the one I manage, roughly about 2.2 billion. There's the Iman Growth Fund, which is about 6 billion. I'm a deputy portfolio manager on that. In the developing world, it's a fairly smaller one. It's 150 million. And then the Sukuk one is the participation fund. We went over what a Sukuk was earlier. Did we explain that properly, or was there somebody had a question? We can talk about that a little bit later, inshallah, if you had a question on that. So The company itself, we're based out of US and Malaysia. We do have one representative here in Europe. Pontus is the one who's helping us out here to be able to, again, how we started in the US was the same way, educating people, going to the masajid, talking to them about investing, because at that time alone, we were the only product that was available. Similarly here, it's all a matter of what the products that are available for you to be able to do. The step-by-step process, I kind of went over this a little bit, right? So what we do is on a monthly basis, we take all of the global companies that are out there, about 5,000 of them, and we apply our Islamic screening that I went over earlier to those screens. Then what we do after that is we have screens for environmental, social, and governance. How
many are left of the 5,000?
Roughly about 2,100 or so. And then we apply the ESG screening, right, for environment, for social, for governance, and then we're left with about 1,000, 1,100 or so stocks. Then what we break it up into different industries, and we have 20 analysts that actually do a deeper dive into the companies that are that were qualified, and then from there we have ideas that we generate. That ideas go into analyst review. Analyst review goes into investment committee. Investment committee then finally goes into a recommended list that we build the portfolios from. The Han ETF, the Saturn Al Kauthar fund is something that we have here in Europe, right? You cannot buy these amount of funds anywhere but the US. We do have one here in Europe. It is the Saturn Al Kauthar fund. The symbol is AML. You probably look it up on Nordnet and Saxo and Revolut and stuff like that.
You get the QR code there.
Yeah, the QR code is right there. And then so, a couple of people have asked in the past, so I'll kind of go over this. What if you were looking for a fund to buy into, like what are some of the criteria that you would want to look for, right? Obviously, we're not talking about, obviously you want to look for something that would be halal, so it would be Islamic. But then the other thing that I would look for is make sure that there's a tenure of the manager, like how long they've been around, and then how well they've done. That's important to be able to kind of think about as well. That's number one. Number two is the fees, right? And as I mentioned earlier, not necessarily does it mean that the higher fee means it's a bad fund. There's differences in, there's even, obviously cars, not every car is exactly priced the same. You're going to get what you pay for. So if you're just looking for that average fund that only does investments in the market and they only buy the market, minus whatever's halal, then obviously you would want a fund that has lower fees. But if you're wanting to look for a fund that actually actively manages the portfolio, wants to be able to try to beat the market and be able to do better for the clients from an ESG perspective, then you would have to pay more for that. So our fees are about 0.75%. The last thing that I'll mention is that look for obviously a fund that actually has a Sharia advisor, right? For two reasons. Number one is the Sharia advisor is the one that's going to approve the guidelines that are used, the ones that I mentioned earlier in one of the slides with all the different guidelines that are there. They're going to be the ones to approve it. And then on an annual basis, they also audit. Just like you get a financial audit done, you would want to get a Sharia audit done as well. Make sure that a third party was able to look at your portfolio and say that it did comply to the guidelines that you were following, and it is something that's Islamic. Our Sharia audit is actually available on our website. So again, with the QR code, you can get there. But that's also something you would want to look for. Okay. With that, I will stop. There's other things, but I'll stop here, and I'm happy to answer, and myself and Pontus, any questions that anybody has. Yes.
So the passive ETFs that are still Sharia compliant, or they try to be at least, wouldn't they also be able to pass this Global Islamic Finance Advisory?
Oh yeah, absolutely.
Okay.
Yeah. I'm just saying this is what you should look for. That they do have one, and it's updated on a regular basis. That's all I'm saying. All of them do have it, but there might be a newer company that's come up that decides they don't need it. I'm saying there's a standard that's been set, and the standard is you should have, just like you have a financial auditor, you should have a Sharia auditor as well. Okay. You have a question?
Yeah, I had these two questions before, right?
Oh yeah.
The first one was that the Shuruk, what's it called? Sukuk, yeah. Is similar as we have in UK regarding the banks?
No, okay, yeah. So the Sukuk is not, Sukuk, think of it as just basically like an investment vehicle. Okay, so let's supposing I had an apartment building that I wanted to now build another apartment building. What can I do? I can go out there and I can borrow the money, right? Then I would have to pay interest on it. I can say, you know what? I have ownership, 100% ownership. I want to sell my ownership to everybody else, raise the money to be able to build my building. That would be an equity, right? Or what I can say is, which is the hybrid between the two, is that I can say, look, I have my building right now, right? I'm going to create a vehicle to be able to move the building into, and then I will sell shares in that vehicle, okay, for a period of 5 years or 10 years or whatever maximum period. Now, I already know the rent that's coming out of that building, correct? Because I've signed leases for maybe 1 year, 2 years, that time. So I can tell you that probably in the next 5 years, if that's what I'm going to do, then I'm going to be able to give you a, I don't know, let's say 4.5% rate of return on that vehicle, because I already know what my cash flow is going to be, okay? Once you've done that, then that becomes what's called a sukuk. And after 5 years, I'm going to give all the money back because I've made it on the new building. But until I do that, I've gotten money to be able to build in a halal way. That's what a sukuk is, okay? That's a little bit different than what the banks are doing. Those Islamic banks are also doing something halal, but it's just a different methodology of being able to do that. So our fund, for example, there are around the world, most of them in emerging markets, so in GCC, in Southeast Asia, either governments or corporates are doing the sukuk. They're in US dollar and they're also in local currency. So what we're doing is we're doing our research again, going out there, looking at their credit, make sure they're going to be solid after 5 years and give the money back. And we're buying these things to generate income for the actual fund. So our participation fund is a conservative fund. It's an income-oriented one. So it's not going to go up 15% and then down 20%. It'll probably stay, roughly between, 0 to 5% up or down. But it gives you a consistent dividend yield at the end of it, right? Then one last thing. Once somebody asked me this in the US, and I wanted to kind of bring it up here. So in the US, also in Hani TF, I mentioned to you, we publish the purification number for the stocks that we have. In the Sukuk fund, it's always 0. Anybody tell me why? Why is it always 0? Like there's no purification you have to do on the Sukuk. So if you understand the concept, you'll understand why it's not there. The reason why is because as a contract or as a vehicle itself, a sukuk is halal. It's doing everything Islamic anyway. The only reason why you're actually giving the purification away is because a stock or a company is doing something that's wrong. But in and of itself, a sukuk is something that's pure. And so that's why there's no purification on a sukuk. Okay? All right. Yes, brother.
How does a sukuk differs fundamentally from a bond?
It's asset-based or backed versus debt.
It's asset-backed. Bond?
It's debt. It's debt.
It's debt.
Yeah.
And this is
Asset-based.
Like, asset-based.
Or backed.
It gives a yield. But what is the risk element of sukuk? Does the yield vary based on the underlying asset?
It could, but it could not also.
Okay.
Like I said in my apartment building,
Yeah.
if all my lease terms are 5 years,
Yeah.
then I know what my fixed rate of return is. But if my leases are expiring every other year, then obviously it could fluctuate. Sure, that's yeah. You will.
As a sukuk owner?
Yeah.
Okay.
No, I can decide that I don't want you to take the hit, and from my balance sheet I can make up the payments. But that's my generosity. I don't have to do that.
Okay. So that's the main difference.
Yeah. Okay. Yes.
What is like active passive ETF
Hmm.
and how active as it I have to be if I go into ETF versus
So, first of all, you asked the question, what is the difference between active and passive, right? Okay. So like I said, the passive means that you're basically taking, go back. Okay. So you're basically doing maybe the first step, which is taking the 5,000 companies, right? And you're doing it based on Islamic guidelines. And then whatever is left over, it doesn't matter whether it's a good company, bad company, whatever it is, you're just going to buy it. Okay, those are called an index. Okay, that's all you're doing. You're buying the market, that is halal. What we do, like I said, is that now it's becoming active, is that we'll do further screening, and then we'll investigate the company to make sure those are the best companies. Because at one point, like you can say, not everything that's halal is good for you. You can buy a company that's halal that's going to lose money and you're going to lose all your money. Very possible. right? So we're trying to look for the best companies to invest in for the long term. So that's the difference between active and passive. For you as an investor, what I would say is the easiest thing to do is to set it and forget it. Okay, buy on a monthly basis, buy on a quarterly basis, whatever you want to do, and just leave it alone. It's time. You don't want to. You just want to spend time in the market. It's all automatically going to compound on its own. Warren Buffett one time said that you never want to bet against the global market, because historically, from the very beginning, there's been growth. There's been down years and stuff, but over a longer period of time, you've wanted to be invested in the global market because it's actually done quite well, and it's only one of the best ways to hedge against inflation.
Risk for me for 5 to 10 years, I don't have to worry about active or passive selection.
I don't think so. I mean, there might be some years that active does well, some years the passive does well. It just depends. I would hope that every year active would do better, because that's what I believe, and that's why we do it. But that's not always the case, right? Yes.
It's just a little bit philosophical question. So previously you said that seeing these investment in ETFs and stocks generally has to be like you have to investigate in the stock itself, so it's not like going to be like gambling. But now when you say that you just have to pay and forget, isn't it like gambling then?
Why?
Because you don't know which companies are in the ETF.
No, but we're doing that for you, right?
Yeah, you're doing that for me. But if it's no risk, then it would not be halal, I guess.
Yeah.
But if you do not know which companies are in this ETF, then it's like gambling, I see. Or
no, I don't see that. And the reason why it's not gambling is because there's somebody who's looking at the companies and buying and selling them, right? There's no chance anymore.
It's not chance. You're not flipping a coin.
Right.
But in Islam, it has to be risk, right? In investment,
There's risk. It could go down. I could be wrong. I could buy a company that goes down tomorrow. So there's still risk there, right? And so that's not the criteria that you're talking about is basically like I mentioned earlier, right? If I was going to be, buying, selling something, and basically just based on the fact that my friend did it, right? Or because I have a feeling that it's going to go up, right? Or there's a new story that came out and I have no idea, but I'm just going to do it. That's the gambling part.
Then it's like more investment in you rather than the companies itself.
Maybe. Yeah, it's possible you can say that. So.
Or like buying gold, maybe it's going up in value, or more, maybe it's going to go down in value.
Yeah. So let me talk a little bit about gold. So thank you for mentioning that. So historically, right, gold has been a store of value, not an investment. Okay. Let's kind of break that down a little bit. A store of value means that if you buy 1,000 krona worth of gold, right? If you put that into a bank account or kept in cash and you put it in gold, in the cash account, the value would have gone down because of inflation. Gold, the value would have stayed the same. Okay, that's the nature of gold. It's not. There's no production out of it. Gold doesn't give you revenue. It doesn't give you dividends. It doesn't do anything except for look pretty and people like it, right? Maybe it'll give you a dividend that if you give it to your wife, then she'll be more happy. That's different. So that's gold. Now what's happening with gold is because of the ETFs, central banks, more people becoming wealthy, gold has no longer is what you call a store of value anymore. It's a tradable investment. It's a commodity, like oil or something else, right? That's a different mentality to why you would be buying gold. So if you're thinking about buying gold to be able to store value, right? Then maybe you have to stretch out your time horizon and say maybe when 10, 15 years from now, it'll be my store of value. But if you're looking at it as an investment, then you have to be knowing exactly what price of gold is going to do. Because if you think it's a store of value, I can tell you last week you could have got a gold for $4,800 US dollar. Then it went up to 5,200, and now it's back down to 5,000. That's not a store of value. That's a tradable commodity. So the mind shift has happened in reality.
It's only go up in value.
That's not true.
It goes down.
It's gone down too. But how long? 100 years?
Like 10 years.
No, it's gone down. But if you take 100 years, for example, then what it's done is it stored its value. gone up. It is going up, but it's only going up as much as inflation is going up. So technically, you're not really making money. You're not building wealth by it. You're just basically just going up as inflation is going up. I can tell you the same thing that if you put it into the market has been up much more than gold has over that same 100-year period. And that's what you want to look at. So there's room for both. So I'm not telling you not to do it, but my always philosophy is this, right? Like I mentioned, if you want to invest in gold, buy a gold mining company, because they're going to make revenue off of the gold that they mine. Gold itself there's no value to it except for the fact that for the past, since mankind was alive, that they found gold. It's just a shiny object that people love. That's literally all it is. So for me, if you're going to buy gold in jewelry, not in bullion, because jewelry you can enjoy it by giving it to your wife, have some satisfaction in it, all that kind of stuff. That's the investment in gold. Okay, it's not in trying to make money or those type of things.
And put it in bank because thieves in Denmark, they focus on DC.
Oh, there you go.
Gold there.
Sure. So did you have a question?
Yes. Do you consider mining companies or oil companies, a gas industry, any company that works in the extraction business as halal, if you consider sustainability as a halal factor?
Thank you for asking the question. We are, from an ESG perspective, we are fossil fuel free. So we have no companies in the fossil fuel industry. Mining is a little bit different. There are very few, but there are companies that actually do pass our ESG screens based upon they're miners that pass our screens. So it's more about really looking at the companies themselves and making sure that they are passing those environmental and social screens that we're looking for, and then we'd be able to buy them. There's not a lot. There's like one or two in the entire world that we've been able to kind of purchase. Okay, did you have a question?
My biggest issue has been about, for instance, you were talking about shipping companies, and if you choose like the Danish company Maersk, then you've got the issue with they actually doing what I would consider haram stuff, like weaponry. Exactly. So that's why I'm just like, where does the line go? Because where is it my responsibility how they are using the money? Because obviously they're getting richer and they will never lose. And it's just that's you were mentioning Nestle before. Well, obviously Nestle is boycott right now because of everything in Gaza, and that's just my biggest issue. Why I just let the money be in the bank instead.
Okay, so thank you for the question. You want to answer this or should I do it? You good?
Go ahead.
Give me the harder ones.
Yeah.
Okay.
I'm sitting back, relaxing here.
Alhamdulillah. So the way I answer this, there's a couple of things. First of all, Islamic finance from an investing perspective and finance, it's an evolutionary process. Okay, when when Tabung Haji did theirs in 1969, they didn't have these criteria that were there. They had it evolved. It was a function of technology, data gathering, a function of being able to screen these things efficiently, and then more knowledge that the scholars had. Okay, so that's one part of it. It's evolutionary. The second part of it is that look, right now where we are in the Islamic investing space is that we are trying to get people out of the hellfire and into Jannah. Riba, alcohol, right, gambling, those type of things. That's where we are now. Once you get into Jannah, then let's talk about everything else. What maybe stage of Jannah you want to get to. And for me, the boycotting or the divestments are in that category rather than in the halal and haram category. Okay? Because there's no scholar right now out there that's in Islamic finance that I've read has actually come out and said that doing what for the boycott, you should be doing it because it's haram. It's not there because it's a very different. Haram is a very big term. You can say it's makruh, you can say it's other, but you cannot say clearly that it is haram. That's number one. Number two is that if you look at BDS, which is boycott, what is it? Divestment and sanction. Out of those three, which is the strongest way to do it? Sanction. of a government sanctions. That's why the U.S. is able to do what it's doing around the world, because it sanctions you against any kind of, either freezing you from the U.S. dollar market or whatever it is. So sanctions is the biggest one. What's the second one? Divestment or boycott? No, it's boycott, right? I'm going to be not investing in Microsoft, but I'm using Microsoft PowerPoint to be able to give my presentation, right? Does Microsoft really care, right, that the Muslim population is not going to be buying their shares? But does Microsoft care if you don't buy their product? You see where I'm going? So the boycott is more important than the divestment. So then after the boycott's done, then let's talk about divestment. Okay? So if you're going to be putting money in your bank and you're going to let the bank be able to use that money to borrow and do limit, that's you're talking about riba. Here we're just talking about a small percentage of people's revenue that's going into this area. I'm not saying it's right. I'm saying let's weigh it out a little bit. Let's be more wise in regards to it. Now, that being said, and I'll come back to you. I know what I'm saying is controversial. It's very easy for us to be emotional and say, I can boycott, I don't want to divest, I want to do it. But when we look at things, we have to look at them on a policy basis, on a very strategic basis. So the reason I'm saying that is because we have a policy, for example, when it comes to defense. Okay, that policy says that if a company is directly involved with defense, right? Like for example, they're making the bombs, they're making the AI software, those type of things, then obviously we're not going to be able to invest in it because that's not Islamic. Okay, that's one thing. But what do you do, for example, when you have a tire company, Goodyear, for example, that makes tires for everybody from automobiles to trucks to manufacturing, and they also make tires for the F-16 that's being used to bomb not only Israel, let's be honest, right? It's not only Israel, Sudan, just keep going with the list of things. What do you do in that situation? So we came up with a policy that said that as long as the company is doing, is selling tires, right? The end product, unless they're really going out there and saying that they're, this is the best tire for the F-16, go out there, it's going to kill all the Muslims. That's different. But if they're just selling tires, they're just selling tires. So we took that, when we came up with that policy, AI didn't exist. So again, it was an evolutionary process. So now we adapted that policy to be able to include AI. So if there's a company that specifically is targeting on the software side or on the AI side to say that, yes, we're going to be going, use our database because we do keep a database of Palestinians and Sudanese people that you can kill, like Palantir, then we wouldn't buy them. But a company like Microsoft or Google, which is not in that business, but people are being able to use it, that's a different story. Okay, you had a sister, you had a question, so.
I was just wondering, how would that be a good investment for me if I know I'm buying a fund with, let's say, Microsoft, Apple, Google, but at the same time I'm actually boycotting that because that's not good for the business. That's not good for my investment.
Yeah. So there's two things. That's a good conundrum. So first of all, let's be very honest. Even if all the Muslims gathered in the world today and boycotted it, we wouldn't be able to move the needle. We're just not big enough as a group to do that. First of all, not all of us will do it. That's one thing, right? Not all of us. There's certain. What's that? Yeah. No. Let me finish. Disagreement after I finish. Sorry. Okay, that's okay. Right? I mean, for a lot of times, for example, in the US, and it happens in other Muslim countries as well, you're not allowed to boycott. Like companies are not allowed to basically say that I'm not going to sell anything to Israel, or I'm not allowed to sell anything to Sudan. That is part of government policy. So that's another aspect of it as well. Now, if you can get all the people to be able to do it at one point in time, then yes, you will be hurting probably, let's say, the bottom line of a company that you have invested in. But I would say to that, let's deal with it when it comes. As of right now, that's not the case. And
that's why we should invest in companies that complete in genocide.
Like what?
Like Musk and like Apple, like Microsoft.
No, what would you invest in then?
Like what you're saying.
Yeah. Okay, so we're agreeing. You're saying, right?
No, we're disagreeing.
Oh, we're disagreeing.
Totally. But I'm saying like sarcastically at like just because like you're saying they are not shooting the kids, it's alright to invest in them.
I mean, if you really feel strongly, then don't put it. And what are you going to do with your money? That's really the question at the end of the day, right?
But like you answered me the same way, like when I asked you about riba, you know, like you answered directly like at me. If you don't want to, okay. So
Yeah, I mean that's
like,
but that is the case.
I'm asking you like because you have more knowledge. Like till also like a solution, not like directly at me. If you understand what I'm saying, like.
No, I understand what you're saying. Look, first of all, like I didn't come up with these guidelines, right? So don't shoot the messenger, right? So the second part of it is that because there's no alternatives available, this is the criteria that was done. Okay, if the alternatives become available, then these criteria go away, right? If there was a functional market in, let's supposing a Muslim country or wherever it was, that all of the companies were Islamic, and you could go out there and you can buy it, I can almost guarantee you no scholar would tell you to go out there and buy something in the US. It just wouldn't happen. But we're not there yet, and we need to be able to get there. So the solution is you build your wealth the way you can. Once you have that wealth, then you put it into private companies, right? I start a company, you start a company, we invest there to be able to uplift the Muslim community. Once you've done that, then these private companies go public, and when they go public, we as a community can buy them as well. So this is a process that needs to happen. We're just not there yet. And so you have to decide whether you want to do that. Do you have a question?
Why you are not using your power or your economy to the company who are the alternative, like Microsoft? You know, Microsoft is making an AI system to bomb innocent people.
They're not making an AI system to bomb innocent. Let's be very clear.
Okay.
They're making an AI system.
But as a Muslim company, Muslim capital, why you are not focusing the companies who are actually working to make alternative, like Microsoft?
Like who?
So I'm asking
no,
you,
there's
why
not,
you're not forcing the young generation or academic to support them
because,
to
okay.
create their own platform or their own.
That's really great in the ideal. The problem is that when I put that in there, the risk becomes higher, right? Obviously, if like somebody's graduating from college and starting something, how many Mark Zuckerbergs were there? How many Bill Gates were there that you never hear of because they failed? So are you willing to take the risk to be able to put into these companies? What we found is, as of right now, the answer is no. Maybe 5 years from now, maybe 10 years from now, the answer might be yes. But as of right now, the answer is no. The people are not willing to take the risk. The second thing, besides risk, is that when you invest in these companies, you can't take your money out and whenever you want. You have to. If the company goes under, or even if it's doing really well, and they can't give you the shares back, you're stuck with that company. So how are you going to be able to do it? If you want to sell it to somebody else, then you go public, which is an whole other process as well. So I'm not telling you this is not a good path to go down. It is a good path to go down. I'm telling you we're not there yet. And the only way to get there is to be able to build our wealth first. That's what I'm saying. Okay? Anybody else? No philosophical questions. They become. Just kidding. Just kidding.
Just to add to this, there's like emerging markets as well. There are options you can say, I don't want in this even IT industry, and then you can avoid a lot of companies. So there is option, but then the risk will be different. But just a question for you, like how much like percentage of world's whole equity is in US?
For us, so in the global index, it's about 70%. Yeah, for us it's 55. Yeah, for us we do about 55. Though and I'll come back to you. Here's the thing about emerging markets, right? You have to, again, everything has to be something policy based, not emotional based. We have to do it that way. So if you're going to say, for example, then okay, we're going to avoid any company or country that does anything wrong, for example, military is concerned. Okay, Saudi Arabia is out, Sudan is out, Turkey's out. What emerging market country is left that you're going to be able to, so that you have to come up with a policy that says, yes, I know I have to do something, so what am I going to do? And then you might not agree with it, and if you don't, you're perfectly welcome to do something else if it's available out there. And if you can find something that's 100%, come and tell us, because we'd love to do it, but there's not. And that's the issue. Did you have
I was looking into your Gulf fund, and what indexes do you benchmark towards, and how has the performance been? Or are there any benchmarks that you're using because it's unique, I guess? So
okay. So we do have to use a benchmark for regulatory reasons. So we use the MSCI Global or MSCI World Islamic Index. Okay. However, when we manage money, we're not looking at that index to say what we should be buying and selling. So it's a little bit different from that perspective. But that's a good benchmark to be able to say over the long run, what could I have done if I would have done it somewhere else. Correct. So that's that MSCI World Islamic Index. Okay, I'll go here and then I come back to you. Yes, come on, answer some of this question. You want to?
With my current job, I was doing the same job what you do. So we had this ETF from my company out in the pension, and I was checking all the companies who was investing in bombs and tanks, and I was contacting each company and telling them not to do it because I had my money in stake,
and
I could not take my money out because I was locked.
Yeah.
So I'm very happy that this company is available, and I can invest in that. I just took my money out of that pension and in Nordnet, and I can invest by myself. So can I do it in Nordnet? So I can invest in that ETF now.
Correct.
If I want.
Yes, in Nordnet you can. The one of the things that Pontus mentioned also about the pension and talking to your companies about doing that. Like for example, Novo Nordisk, right, which is obviously fairly big in Denmark. If you go to the US and you're working for Novo Nordisk, you can buy our Islamic funds in their 401k. And the only reason why you can do it is because the Muslims that were there demanded it. So think about it from this perspective of if you are working for an international company, don't just ask. Say, wait a minute, you're doing it for our employees in the US. Why aren't you doing it here for us? You have to be a little bit more bold about asking for thing, and they will give you. It's something that they will give you if you just keep asking, and it's a matter of teaming. So back in 2003, right now, since we're talking about Microsoft, I'm based in Seattle, so Microsoft is very heavy based there as well. We approached the Muslim group to be able to try to have our amount of funds in the platform. And so what they did was they went to all the other what's called employee resource groups, ERGs, and they went to the Christian one, they went to the environmental one, they all teamed up together, and then they approached management and said, look, whatever you're offering us as a pension or offers, we don't want any of this. This doesn't work for us. So give us a better choice than we have. So finally, Microsoft, after about 2-3 years, ended up doing it. Because Microsoft did, and because it was very competitive for employees, Google started doing it, Cisco started doing it, all the other companies in the tech space doing it. So we're doing this slowly over a period of time. In the US right now, out of the 500 companies that are Fortune 500, the largest 500, 254 of them offer a choice where you can buy Islamic funds. It takes time, but you got to keep pushing for it, inshallah.
That's great.
Don't take this question offensive. I would just ask because for getting advices as best so we can understand.
I'm offended before you even ask.
Because MSI, World Islamic ETF,
yeah,
and also the ASP 500, etc. I got the imagination of or the assumption that you're making trades with them. But the asset management of those ETFs are, based on Vanguard, BlackRock, the very big Zionist entities. Do you have any, concerns or do you have any reflections on those? Because personally, I'm not investing in ETF.
No, but so
SP 500.
So let me stop you because I think you're misunderstanding. Okay. Yeah, because the MSCI, like the World Islamic, is only a benchmark. It's actually not something that. You can buy an ETF off of the benchmark, but the ETF is separately controlled. Okay. Now, that being said, like for our ETF, we can choose the broker that we buy and sell with. Okay. So that's within our control. So we can choose, for example, to go directly with BlackRock or Goldman Sachs, or we can choose to use a smaller one. Okay. Now we do that. We use a company called Vident. So that's a smaller brokerage company to do it. Now, what they do on the back end, we have no control over, right? So maybe they use a bigger broker. I have no idea.
I'm asking because I don't have the knowledge of it, so I just want to hear about your wishes, your understanding, so we could be more clever.
Sure, that's what I said. So we do. I mean, it's very difficult for me to kind of explain this to you because I can only give the U.S. example. A lot of people in the US, for example, will not invest in the market, but they give their money to Bank of America to be able to hold for them. You don't think Bank of America is doing the same thing? Right? A lot of people would maybe, so you have to, again, there has to be like a policy that you have to say something is allowed or not allowed. You can't just do it based on emotions, because you can poke holes on anything you want. And so, we're trying our best. We are living in a riba society, let's be honest, right? And so we're navigating through it as best as we can. Does that mean we're 100% pure? No, absolutely not. Does that mean we're going to make mistakes? Probably will. And does that mean that maybe our policy now, 3 years from now, will change based on new information? Yeah, it could. We just have to be adaptive and try to do the best that we can to stay as Islamic as possible. Okay.
But I think what Monim is talking about is index. You're talking about other products, BlackRock, Vanguard. There are other ETF products. Our product has nothing to do with those products. Those are other companies. It's like you have
Every is advisor says SP 500,
S&P 500. That's an index.
Yeah.
That's an index that the 500 largest companies in the world in an index, and you can make a product. So BlackRock can make a product that call them BlackRock S&P 500 ETF, and that will say we will invest in the S&P 500. We will buy all the 500 companies passively. So if Microsoft is 8% of the S&P 500, we'll buy 8% of Microsoft. And if Novo Nordisk is 0.5%, we'll buy 7. Exactly. So you're talking about products. We're a product of our own. You can buy a product that invests in this index, S&P 500, MSCI World Islamic Index, but that's completely different.
Yeah.
So you're talking about other ETF products that invest in the index, okay? So, but we don't have anything with BlackRock and those guys. We're another company.
So we're 5 minutes ahead, past our deadline. We're happy to stay here longer. It's totally, but if you need to leave, then please go ahead and actually do that.
Is there any graph you can show for the
No, but you can probably pull that up on your own. Okay.
Yes.
Generally, how do the Islamic funds do in comparison to the non-Islamic ones? So the returns are they higher, lower? Generally, is there more risk, less risk?
So I have a podcast that I run called Halal Money Matters. And one of the subjects that we talked about was this, what's the subject about? Whether Islamic indices outperform or not. So if you take an Islamic index and you take the same conventional index over a long period of time, there's statistically no difference. Okay. Now, if you take an active fund versus an index, that might be better or worse, depending on the manager, those type of things. If you look at our funds, the amount of funds, we have traditionally over time done much better than the index. And that's the reason why we've grown. That's the reason why every time there's a downturn in the market, we've actually added assets, because we go down less, right? And that's also the reason why half of our investors are not even Muslim. Okay? I think there was a question here also.
Just a remark to give you like an example of talking about indexes. Like in Denmark, we have something called C25. C25 is, most people in Denmark know because it's the 25 largest publicly traded companies in Denmark. So once a year, a committee selects 25 largest companies, and then that goes into the index. If you're invested in the index, you would be getting exposure into these companies automatically. And in Denmark, it's like 50% of Nordisk or something. Because it's just a huge committee. Just to give you a comparison, S&P 500 is secondly, a lot of people actually don't know this. I've worked in banking for many years, but once you put in and how the business model of banks actually works. So all of us have money in the banks, but we don't understand what happens with the money. So just a rule of thumb, I work in Danske Bank, which is the largest bank in Denmark. When you have 10,000 kroner in that account, it is leveraged up to 20 times and used for either debt or investment in the market. Whatever they choose. It's like, I worked in the markets as well, it's gambling. It's literally gambling what they do. So your money goes into that system of gambling, basically. And so imagine that 10,000 krona becomes 200,000 krona. Your 10,000, and is leveraged for debt and other. So you have to think about your money needs to work, as Mona also mentioned, to lift ourselves up. So a lot of people go into nitty-gritty stuff. Okay, we don't want to invest in mass because we have one ship that transports goods to some place, which you will not agree with. But they also have transporting millions of goods otherwise. Yeah, so you have to have a big picture and strategy in that when you're dealing with money. And at some point you have to say, this my responsibility goes to here, and beyond this point, it's out of my control.
True.
Maybe we can just have the last questions, and then you can just each take like 5 minutes just to wrap up.
Yeah, sure. And please take a picture. If you have questions, email me, WhatsApp, connect on LinkedIn. I'll be happy to help out if there's question coming up afterwards.
So do we have a final question for?
No, I move this to final question.
Yeah.
Oh, sorry.
We'll take this. Yeah, no worries.
Okay.
Sister.
Do you want to start there?
Sure. Do you want me to hold it?
No, just speak.
Okay. So regarding the ETFs that you own and you administer, you have in different markets, you have both in the English one, you have in the American, you have in the Swiss or German, and you have elsewhere. Is there any practical difference for us as consumers of that? Which one we choose to invest in?
So the US market you cannot buy into. Okay. Between London, Swiss, or Germany, the only difference would be the currency. Okay. So that's the practical difference.
And then another new question. So there is a demand and supply, and that determines pricing somewhat. And then there is the performance of your investments as well. And how do these two go together in terms of pricing of the ETF that I buy?
So the demand of the ETF will not rise based on more demand coming, because I told you we can issue more shares, right? So the market maker who is on the exchange buying and selling or helping you buy and sell, they have to maintain a balance between the buys and the sells. If there's any of imbalance, they'll either have to create the unit or dissolve the unit based on that. So it'll never vary very too far away from the actual value of the portfolio.
So if, let's say, entire Denmark wants to invest, it will not cause the price to spike.
No.
The price will be set by your investments and the return.
That's correct.
Okay.
That's correct.
Makes sense.
Sister.
Could you just go back to the slide with the high risk
Where was that?
Keep going.
More back, I think.
The triangle.
That one.
Yeah.
Exactly. It's just because I've read, studied a little bit Islamic finance, and I read that high risk is not allowed, but medium risk is and low risk is. So is it just because we could do, like, what do you recommend, like, do high risk but not too much, or what are we talking about? Like,
I think, want me to answer?
Okay.
I don't know. You can fill in.
I just read it.
Yeah, I mean, it can become gharar, uncertainty. Yeah. Or what's the gambling? Maisir. Okay. But I think it's all about what Monim said. Is do you know what you're doing? Do you know about the risks? You know, where are you? So this is kind of how it plays out. If it's going to be, so I don't think you can say that something that's high risk is not allowed. I wouldn't say that. What do you say?
No, I completely agree. And I think it's more a matter of, you have to look at the underlying asset. And if you look at the underlying asset and the asset is halal, then whether it's high risk or not is based on your appetite for doing it. Like I can tell you, for example, that if if there was 5 people and Muslims in this room that wanted to start a business independently each, and we all decided that we were going to give them each 10,000 krona to start the business, that is a very high risk proposition. But that doesn't make it haram. It's actually halal. It's encouraged to do that because you want them to succeed, right? So just because it's high risk doesn't mean it falls into the area of gharar. Gharar is basically speculation and or uncertainty, right? Uncertainty meaning you don't know what the potential outcome can be or what you're buying. Forget what you're buying. Actually, you don't know. So, for example, Bitcoin, from my perspective, is not an issue of riba or not. It's more a matter of gharar, right? What are you actually buying, and is there anything backed by those? So it's a gharar that actually causes, for me, pains about Bitcoin, not anything else. Okay.
I want to add something as well, because you can have a sukuk on the low medium risk, or you can have a property on the low medium risk, but it depends on also what currency. So then you have a currency risk. I'll tell you, there was in Sweden, it was very popular. I was told, I don't know how many years ago, but maybe 10 years ago, someone did a property investment in Turkey. So all the Turks invested. Okay, what happened with the lira? What happened with the Turkish currency? It totally plunged. So they invested Swedish money in Turkish lira in a low medium risk investment in Turkey, but they lost loads of money because of the currency. So you have to think, even though it might be a low risk, you have to put on the currency risk as well. So if you invest in another currency, so that's something you have to think about as well when you do investing in ETFs and whatever you do. If you invest in another country, you're going to have the currency risk. I had a client once that he invested in interest funds in Switzerland, and it's like the currency just, wasn't making any money because the currency took away everything anyway, and it was low risk investment. So that's something to take with you. Yes.
Just a comment, because I can also get a little bit annoyed when people say that it's haram, that high risk investments are haram. What is a high risk investment that is haram is like shorting, for example, because that's ethically completely wrong, because you're actually investing in a company cracking or losing money. I see that as a more unethical law. I can't say something is haram unless it is written in Quran or Hadith that is haram. Yeah. But I would consider that as more a high risk investment that you would highly should just stay away from.
Yeah. And shorting is actually involved in riba as well. So I mean, it's going to be.
Anything can be a high risk.
Yeah.
No one knows the future of Allah subhanahu wa ta'ala. What is written.
And be also very careful when I did this mistake myself. I was going to invest in gold, so I bought a certificate at Nordnet, a gold certificate, without thinking that this is just a piece of paper following the gold price. I wasn't actually buying gold. I didn't own gold. So if you do, you have to look for, is this product that I'm buying, actually, do I own the asset? Do I own the shares? Do I own the gold in a vault, for example? So this is something very, very important. Even if Bitcoin, I mean, you can't buy a Bitcoin certificate. You have to actually own the Bitcoin in a wallet. Yes.
Yeah, you're just talking about currency shopping. I just want to have your assessment on the US dollar in the years to come, with risks evolving and so on. So,
Oof.
That's all you, man.
Did you bring in the crystal ball? Sorry. No idea. No idea.
So I'll answer that just from a fund manager perspective, right? So there has been always this thing in the market globally that what's called American exceptionalism, right? There are things in the market in the U.S. that are not anywhere else in the world that make us better than other investments. I'm not being arrogant. I'm just telling you how to. So whether it be the education system, whether it be our policies on regulation, whatever it might be, there was what's called American exceptionalism. So people paid a little bit more for a price of something because they knew they were investing in something a little bit safer. Okay, that, in my opinion, in the long run, let's say 10, 15 years from now, is going away. If you talk about the American exceptionalism in education, funding is being pulled. If you talk about American exceptionalism, for example, in regulation, they're being less regulated and actually on other areas otherwise. If you talk about exceptionalism being that 2/3 of all businesses that are $1 billion in revenues or more are either from immigrants or the descendants of immigrants, and that's what exceptionalism is, that's going away also. So all of the factors that talk about American exceptionalism are moving away from that point of view. So in the 10, 15 years from now, I do see a weakness in the US dollar that we haven't seen in the past. Okay, the dollar is not going to go away. Let me be very clear what my opinion. The dollar is not going away, but it doesn't mean that other countries can't rise also. And so what we're doing is, as a fund manager, is we're shifting our focus now because we're much more longer term in nature. I mean, I can't remember now. I've been so many seminars. We've owned Novo Nordisk since 1994. Like we're long-term holders, that type of thing. So what we're doing is we're shifting our assets away, some of it, not all of it, away from the US dollar, like US companies, and moving them more into Europe, Japan, and other places, because those currencies can benefit if the US dollar weakens. Okay, so that's kind of gives you an idea. Now, the problem with the real long-term is you make a short-term change and everything, the trajectory changes. We have midterms elections coming up next year. If the Democrats win or something else happens, then the entire trajectory of what's happening in the US right now could change. And then I might come back to you next year and give you a completely different opinion about what's happening. But as of right now, that's our philosophy. Okay. Okay. I do want to be respectful of your time, so please feel free to leave if you need to. But I think there's a question in the back, and then we'll make that the final question. Yes.
I was just thinking, I also understand the difference between halal and haram, and when we were talking about Israel or Maersk or any other of these companies, I understand that I wouldn't use the word haram against these companies, but still, I think it's something that occupies a lot of us. So I think it's unethical, and I think at least the companies that were mentioned in the UN report as directly financing the genocide, I don't think that we should be investing in them in any way or form, even if other people are doing it. I still think that we shouldn't be doing that. And I think that you should have a product. Perhaps you can also have the other products as well for people that don't care, but at least offer a product for people that do care about it, where you actually exclude those companies. I think for us that care about it, we accept that perhaps our return of investment will be lower, but I don't think that.
I appreciate your comment. The only thing that I will say to you on that, I totally agree with you. The problem is that I cannot create enough demand for a product like that. We've tried it. It hasn't worked. To be able to get it, because at the end of the day, across the board, what people are looking for is return. And if I was not, for example, in the past 2 years, in these companies that you're talking about, my return would have been negative when the markets have been positive. So we've thought about this idea. We've molded for a long time. We just can't make it work. So if somebody can come to us and say, you know what, we have this pool of money, $50 million, $100 million, whatever it is, even $10 million. We have this pool of money, create us a product, and we'll put this money in there. That's a different ballgame. But unless you can do that, we know from experience of the 40 years we've been doing it, that's not what people are looking for.
Can I just comment on that as well? Because other like other financial companies, banks and so on, they do, for instance, have sustainable funds where they only have sustainable companies.
It's a little bit different, and I'll tell you why.
But also, a lot of people don't invest in them. It's for those people that actually care about it. And the return of investment is low because, you know, they're not going after the big companies, but still they offer it to people that you know, value these.
So I think there's a misunderstanding, so let me explain it to you. When those, let's suppose in BNP Paribas, which is, you know, quote unquote, the ESG bank and fund, when they launch funds, right, they of their own capital put in $100 million to make sure that it doesn't lose money. Number one. We don't have it, I'm sorry. Because they want the product to succeed, or they want the product to have money in it. That's number one. Number two, right, is that they have 300 products. So if they have one product that's not going to do well, what are they going to do with it? They're going to shut it down. And they still have 299 products that are left over. And that's the reality. We have how many products? 4 in the US, 1 over here. We started another product that doesn't do well. Forget about having one product. We'll have no products because we can't make enough money and we'll be losing it. So it's not practical what you're talking about. What is practical? I'll tell you this.
Why wouldn't it do well? I'm not saying that you should.
The market's not there for it. I've done the research. Maybe you have also. If you can prove me wrong, then we'll create a fund. Give me $25 million, I'll create your fund overnight. That's the reality. It's just not there, right? The banks, you remember, you know, if we're competing with the likes of BNP Paribas or Goldman Sachs or those, they can create money out of thin air. They're doing that right now. The leverage that he's talking about, from the 20,000 you put into the 200,000, they literally can make money out of the create out of thin air and put it into their fund. We can't do that. That's not Islamic for us. So when we come out with a fund, even this European product that we have right now, so far we've been doing it for 3 years. It hasn't made us any money, right? How long can we go with still doing that as a benefit to the community? That's really the question. So we're going out there, we're educating people to be able to create the demand to put in there, because we know when we did this in the US, it worked. And we're hoping the same thing can happen here. But to be able to now do variations of one product because there's a certain community that wants it, unless there's money behind it, it's just not going to work for us. Maybe BNP Paribas can do it. Maybe you should go to them and ask them.
No, but so why should I, as a person who actually care about this issue, why should I invest in your ETF instead of just, you know, picking my own company?
No, you can. And if you really care about it, then do it, please. I'm not telling you to put it on our fund. But on scale, right, if you want other products to be able, you have to be able to support the people that are doing it. So can you use Nordnet to be able to go and buy whatever it is you want? If that's how you feel, please go ahead and do it, because it's going to make you feel better at night, and you'll be able to stand in front of Allah subhanahu wa ta'ala and be able to answer whatever questions he has. I'm not going to be defending you at that time. I can't, right, on the day of judgment. So do whatever it is you want to do. What I'm telling you is that if we want our companies, as Muslim companies in the investment world, to succeed, we have to start somewhere. And you don't start with the very, very smallest one and pray it's going to do well. You have to start with whatever the most of the people want, and then create products after that when the demand has been created.
There's so many big companies that you could pull in an ETF. Maybe I'm just not understanding.
No, I don't think there is. And this is not. And not only that, it's not about pulling in companies that are doing it. It's pulling in the companies that are doing better than the other ones. And right now, if you look at the 7 largest companies in the US, the Mag 7, if you take those out of the US economy or even out of the stock market, you have a negative return in the market. You have the US economy isn't even growing anymore, right? So these companies are fairly large. You have to be there. I'm not saying it's right or wrong. I'm just telling you what the reality is. And the reality is that even for Muslims, what we've experienced in the US, right, is that at the end of the day, the bottom line is, what is the return? Hard news, but it's reality. And we've done the research to be able to do that. So anyway, inshallah, first of all, I just want to say Jazakallah khair for the time. If I offended anybody, that was not my intention. So I'm just trying to be as realistic as possible. I'm trying to give you as much information as possible. So please forgive me. You know, all of this is not worth it if I'm going to get negative reaction on the day of judgment. So don't hold anything against me. This is personally what I'm saying that. But I hope you did benefit from it. And inshallah, our goal is to be able to educate the community so that we can all grow in our wealth to be able to do the things that we really want to be able to do. So Pontus, you want to close off inshallah.
Yeah, Jazakumullah khair. Thank you so much. And we'll be happy to come back. And I really appreciate, and I want you to know that the industry is working on this. But until we're there, it's like Monim says, we need to also support the few halal products that are out there. And from them, we can grow more, inshallah. So thank you so much.
Jazakumullah khairan. Thanks a lot for coming. And I think many people benefited a lot from this. And I'm sure you're ready to answer any question people might have if they contact you on any of these.
Yeah, definitely.
And tak fordi I kom alle sammen. Dem, der ikke er medlem af Dansk Islamisk Center, I er velkommen til at gøre det. Det er også en anden slags investering i en anden form for dimension. Vi er en selvdrevet moské, og vi har husleje hver måned, og det er ikke nødvendigvis altid så nemt at få den til at passe. Så I er meget velkommen også til at donere. På den måde så kommer I også til at være opdateret på vores arrangementer. Vi har løbende arrangementer, og hvis ikke man lige fanger, at de er der på sociale medier, hvis man er medlem, så får man det også internt på vores liste, og der er nogle fordele i forhold til betaling, i forhold til ramadan-arrangementer og sådan nogle ting også. Men tusind tak, fordi I kom. Jazakumullah khairan. Salam alaikum.
Oh, yeah.
Let me take this. It's just one of these fancy ones.
Okay. Alhamdulillah.
Did you even
What's that?
Your mic?
So, I just give it to.
Okay, thanks. Jazakumullah khairan.
That's because he's the contact here. Time zone difference.
More spicy questions this time.
Yeah, much more. Yeah, it's good. But it's good. It's good. They're out there, so I'm glad.
It's one.